Welcome to the show. It is Old School Friday, where Rich and Ange are back. And it's such a great day because the bromance, is it over?
Well, let's go straight to a poll, right? Let's not mess around on this Friday, June the 6th. Whose side are you on? Is it Musk or Trump? Straight 50-50 poll coming up on your screen now. I know who I'm with.
I know Phil's going to sneak in. Time will tell.
But in case you've had a heavy night out last night, you've only just joined us, you've got no idea what we're talking about. Let Angeline and I run you through the latest truth bombs on social media.
I'm going to be Musk. He's going to be Trump. So time to drop the really big bomb. At real Donald Trump is in the Epstein files. That is the real reason they have not been made public. Have a nice day, DJT.
I don't mind Elon turning against me, but he should have done so months ago. This is one of the greatest bills ever presented to Congress.
I hope Jesse 14 is here because I'm bringing out an imaginary chainsaw. Wise words, wise words. Capturing Trump's past criticism of extending the debt ceiling.
Look, Elon and I had a great relationship. I don't know if we will anymore.
You do that movement really well, actually. Elon saying in reply to a post suggesting Trump's impeachment and J.D. Vance as a replacement. Yes.
Yeah, so then Donald Trump goes on to say the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. I was always surprised that Joe Biden didn't do it.
Musk then announcing on X, in light of the president's statement about cancellation of my government contracts, SpaceX will begin decommissioning its Dragon spacecraft immediately.
And then, finally, Donald Trump coming out with Elon Musk is acting out of self-interest. He's upset about the removal of EV subsidies. So, Donald Trump going for Tesla. Stock down 14%. Donald Trump going for SpaceX. However, Elon fighting back and saying, look, you need SpaceX. We literally taxi your astronauts to the International Space Station.
Yeah.
So if you want to wipe out the International Space Station, go right ahead.
And also the threat of who's going to carry your payload, right, up to space continually if we're going to do this whole Mars business. It's just is this the beginning of a real messy, live public bromance breakup? What will it do to shares? Well, let's have a look. You're going to whack up Tesla.
So, the interesting thing is the Germans do not think so. So Tesla already bouncing 7% this morning. And we are, so we're seeing on the Frankfurt Exchange pre-market, Tesla trading around about the $300 mark. Okay, so $300 Tesla back. We won't see it in that today yet, but that's up 4.6% this morning. And that's because Trump and Elon are having peace talks today. So he had peace talks with Z yesterday. He had talks with Merz, and now he's having peace talks with his supposed ally. He's having peace talks with everyone in general, right? And then, It's the art of the deal. It is the art of the deal. Paul Taylor! Rich, don't try, am dram. Boise saying, do they know this is live? And Julian saying, who will Trump deport next? Steve Bannon has already questioned Elon's status as an American citizen and said that he should be deported to South Africa already. I mean, it is different world, absolute joke. So, on that, do we have anything else on today's show? We definitely do. It's coming up. Right, and we have overnight action next with myself and Rich, of course. Old school style will take you through everything from what is expected from the jobs report and also Circle. If you were watching that yesterday with me, what a debut on the New York Stock Exchange. And then we've got Joachim Clement coming in. Or Joe. With Joe, yeah, that's easier. And he's going to be chatting to both of us. 8:20, and warms them up, and then I go in hard at 8:35.
And then at 9, we've got the opening bell with Rich and myself, with Elliot Harris, who's going to come to us and tell us all about what to expect from on the volatility front ahead of that jobs number and into the coming week.
And what is that at 9:20?
Yes.
We ask, what questions are you going to have for producer Phil to give to Angeline?
Slam them right here, and we will get those questions answered.
Ask@ig.com.
And at 9:40, the great Issa Bhattacharjee comes back on to give us a heads up to the top tradable events that are in the coming week. So plenty there. Do slam the like and subscribe button, because we're nearly at how much, I hear, Phil?
893. We need 7 more to get up there. So wacka wacka, why is the market ripping? The market is ripping because peace talks are on. After the jobs number today, Elon and Trump are going to have a phone call. They are not trusted to meet in person just yet. So yeah, so that's why, you know, it was all a little tiff on a Thursday afternoon and evening.
And the interesting thing is, are they going to have it on one of those apps where a journalist is, you know, mistakenly allowed in? And
oh yeah, oh, to be on that phone call, my goodness me. Right, let's go into overnight action. Let's see what's going on. Right, now producer Phil's back today, so of course he must have made an economic calendar for us, hasn't he?
Yes, he has. Has he?
Let's have a look at these expectations for the jobs number. It's a big one. It's a big, big day.
130, right, is the expectation?
Big, huge day. That's right, 130,000. So let's get your estimates into the chat here. Who's higher? Who's lower? Let's get your estimates in. I am sitting at 162,000.
Nice. Hot number that, Rich. I am actually going to go 100, and I think it's just going to be on that print. So maybe 135. I'm not that hopeful.
Oh, that's very in line. I think the only thing you can promise with the non-farm payrolls is that they don't end up in line.
I just think that, you know, this time round, you know, everything's going to be a bit flat.
Yeah. Right, and then unemployment 4.2%. So let's have a look then at the estimates of the other stuff on my economic calendar here. We've got average hourly earnings. Remember, that one's important as well for inflation. Average hourly earnings at 3.7%. Participation rate 62.6, and the unemployment expected at 4.2.
Now, what's interesting is I read somewhere that the participation rate this time round is going to be the interesting one to watch, because, you know, all the Doge, those that put their hand up for, you know, basically voluntary redundancy, you know, they're all going to be, you know, past using the money that they had for that redundancy and now kind of coming back into the market looking for a job. So that participation rate might be a bit more of an interesting print than usual.
Yeah. It's going to be a big day because we'll talk about it more later with Joe. But if this number is sub 100, that is going to ring the alarm bells. Now, the ADP number suggested it would. Weekly jobless claims yesterday suggested that that would be a weak number. But maybe, I don't know. It's just a survey, remember, so it can be volatile. But that unemployment rate, that's what I see going up to 4.3%. And that will be taken negatively as well.
Just also putting up this interesting story, if you want to read more into that print that we're expecting today. You know, everyone expecting that this number could just show how employers are willing to bend before they crack. Lots of people in previous months have already found work, you know, when they decided to re-enter the job market after taking their voluntary redundancy. But right now it sounds as if that, you know, things are
Let's
shakier.
scroll past the competitor's advert.
And that, you know, the labor market, you know, has been such a source of strength for the US economy, hasn't it?
Yeah.
But there is this concern now that we are going to start seeing weakness coming through, right? And the stop and start, hire and fire start to become more of a thing. Right, the poll is out. The poll results.
Excellent. Producer Phil managed to piss me off already on a Friday morning. Only time will tell is not an answer to this.
Told you I was going to get it in somehow.
Musk, 52% Musk. So that's right. That I am the same. I am absolutely on Musk's sides because this big, beautiful bill is an ugly piece of work. Perhaps the ugliest bill that ever existed. Adding $3 trillion to the deficit is absolutely insane. And it's just so typical of politicians that are only around for 4-year cycles to be that ill-disciplined and irresponsible with the future of the country. So Musk, yeah, he's got my vote. Not the biggest fan normally, but yeah, certainly in this one he's.
Yeah,
he's
you don't normally like the whole Tesla Musk thing. This is interesting.
Yeah.
There's just change of heart here. Change of heart.
No, I don't have a bias on Tesla.
Well, for those of you wanting to find out what is going to be said on that peace talk later on, I can confirm that across the newswires there is no date. I can't do that Trump accent. Wait. There is no time, but everyone's looking at today as a date, so there's no time given.
Politico have said it's today.
Yes. And if you want to rewind and find the most recent joint interview that they both did on X, formerly Twitter, of course, that would be February 18th. So if you want to just refresh your memory before today's, we don't have a time, but it's going to happen today, according to Politico. Andrew McKelvey there saying the big, beautiful bill is big and beautiful for gold. I agree.
Yeah, absolutely. And Bitcoin as well. Bitcoin was down 3% last night at 100,000. And I saw a tweet come out. If you're selling Bitcoin because the world's richest man and the President of the United States are having a public battle, then you really do not understand anything about this asset.
The more uncertainty, the more of clashing of this kind of geopolitical uncertainty too. That's just going to drive digital gold higher.
Yeah. Right, great moves last night. But I think we did go out. I don't know if you subscribe to our channel. Some of you do, 47% of you. But if you did subscribe to our YouTube, you would have seen a short that we put out on Wednesday when Tesla was trading at $334, warning you that this was a real risk to the Tesla share price. And on the very first message that Elon put out.
And I'm going to whack that up for you so you know where it is. On the homepage, just go to Shorts where Rich mentioned, and here you are. You can find all our shorts there, and that's the one he's talking about. Here we are.
So yeah, so we put that out on Wednesday. Tesla was $334, but this is a win for human minds because the algos got it so wrong. The Tesla share price was up 3% and the algos were trying to push it higher and higher on momentum. Mm-hmm. And they could not fathom what the repercussions of one tweet could be from Elon. And the algorithms got it completely wrong. And you saw Tesla eventually get absolutely crushed yesterday, down 15%. Elon personally lost $34 billion in his wealth yesterday. But as we say, looking higher this morning, already bounced 7% from the lows, trading around about the $300 mark in pre-market trade in Frankfurt.
I can tell you someone's coffers that got much, much larger yesterday, and that is the CEO of Circle.
Wow.
Yeah,
What an
Jeremy Allaire is his name. I hope I've said that right. Allaire. But its IPO closed at 83.23 on the New York Stock Exchange, and that was 168% rise from the offering price. I've been told by producer Phil, do not bang your pen, Angeline, because it can be picked up. Yeah, it was incredible, and this is the first ever, Trader Friends. If you guys are wondering why I am bringing this up, it is historic. It is the first ever stable coin IPO.
Unfortunately, there wasn't really a chance to trade that because it opened, about $70. And you would have had to been really quick to get there because within 15 minutes, it was at 88. So you can see it traded at a high of 94 before closing at 83. IPO is so volatile, so volatile. So yeah, unless you were in that IPO, we wouldn't have really had a chance.
Now, what's also interesting is that, Circle is really closely watched because since January this year, guess how much in terms of USD coins on the Solana blockchain it's minted? Just have a guess. Trader Friends, have a guess. Bang your guesses here. Because it was much larger. This number was much bigger than I expected. $8.2 billion.
Wow. Great guessing competition. Now, talking about guessing competition, let's look at what we've had so far for the expectations. So reminder, I'm at 160, Andrew's at 135, Steve Davies at 103,000, and we've had Julian at 98,000. He's going low. Maturin 168, stealing my thunder a little bit there from on the high side. What else? What more do you guys think? Let's hear what Waka Waka thinks. Let's hear.
Yeah, get it in. Get your job report numbers in. Monkey Man, has Monkey Man got a number?
115 for Neil. 115,000.
Everyone's lowballing me. Yeah, David, Boise, I think it will not be spectacular. I think we're going to start seeing it get really, wow, Monkey Man, 90s.
Cat amongst the pigeons there.
Lowballing it
50.
there.
I would love to see the market this afternoon. Please come in 50,000 because that will really, I think we could see down 2%.
Yeah.
On 50,000.
Poppy,
The ISM services has pointed towards it. ISM manufacturing wasn't great either.
No. I think maybe further towards the end of the year, we might see those sort of numbers, Poppy, but maybe not so much now. Jesse 14, good morning. Guten Morgen, under 100.
Yeah, go with that.
Who's Shrimp Fred?
Theo van Barthold, 100. What a great name.
Yeah, it's very posh indeed. 110 there. So, lots of, let's talk about Broadcom as well. Broadcom was interesting.
Go on then.
Oh, I'm going to bring up the chart.
The expected move was 7% or 6%. I think it had been kind of crushed. And it came in under that.
Yep. And also, what was interesting about Broadcom is that we looked at the shares yesterday. This is the 1 hour chart here. And I looked at this, didn't I, with you guys, with Jolie Lepselter at the end. We gave you options and also strategies using technical analysis. And I did say that if we break through this area of interest where I've circled and I've shown in that rectangle there, and you see the oval that I've shown you at the bottom of the RSI, so what to look out for was, if we get across that level, we are then going to see this come back towards that trend line that I was drawing there. So I drew that yesterday to illustrate this, and that is essentially what happened. We broke through that area of interest and came back towards that trend line. Seeing a bit of resistance there. This is the hourly chart. So we saw resistance at around support, sorry, at that point. What is interesting about Broadcom is that it reported revenues of $15 billion. This is a 20% rise, but yet we had this move there. And part of it is because of concerns over its growth prospects, but also it's had such a huge run, right? Look at that. It's had such a huge run from
it really
early
has.
April.
Now, talking of huge runs, and it's a special app because we've had Friar Tuck come in with their guess for the non-farm payroll, 130,000. Robinhood, what a run Robinhood stock has had, going from 30 bucks to 72. That's since the start of April. So what an incredible move there from Robinhood over that time period. 130% rally from the lows that we saw then.
Do you like silver as well? I mean, silver's gone, yeah? Just showing you silver
Just
here.
1 second before we go. Cam, you were right. My cup of tea had cold milk in it. Can you go make me another one, please?
Oh, is that what the comments around it looking like?
Yeah, they were saying, what's wrong with your cup of tea? It looks like it's got dodgy milk in it.
Yeah.
It's because I put cold water in. So yeah, thanks, Cam.
I thought it was your new dodgy oat milk regime.
No.
Showing you the daily chart on silver, just very quickly, because silver has been going, as Dylan Rattigan mentioned, cuckoo bananas. Cuckoo bananas, I'm going to take that as a technical term. Cuckoo bananas this week. So if I have a look at these big pillars of green here, showing, you know, the jump on Monday and then the jump on Thursday as well. It's now up 1.3% there. And silver jumping to the highest level in 13 years following the gold rally.
It was certainly all the chatter yesterday on the WhatsApp groups. Excuse me. So apparently silver was in a range of about 28 to 35 bucks for about a year. As such, a proper breakout implies a minimum of 7 bucks, so up to 42. But we had a comment on positioning. So the bottom line is that the trade is not crowded yet at all. ETFs have added 26 million ounces year to date, and the other flows have been relatively uninteresting there. So the ETFs hold 900 million ounces, and that's been well over 1 million before in 2022. So yeah, gold's large big break, signaling a new cycle, was roughly at 2,000 an ounce, and then it ran 70% in 18 months. A new similar bull cycle in silver would take it to $70.
Boy, hey. Right, we've got a break coming up, but don't go anywhere.
Oh, this is my favorite bit of the show. It's Guess the Chart. Yes.
Phil won yesterday.
Phil did win yesterday.
Are you sure this isn't insider trading? On the poll, on the guess the chart.
So is it a stock, is it an index, or is it a commodity, producer Phil? It is a stock, and is it British? It's a British stock. Right, here we go. We're going to go for a 2-minute break. Cam's refused to get me a new cup of tea, so I'm going to go and fill that. And by the time I get back, I want a few guesses of the stock on the screen, please.
Hey, 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 welcome back to Opening Bell. All your guesses coming in thick and fast, but is producer Phil going to
4
win
seconds,
in a
people.
row? Come on.
4 seconds.
Come on,
it
you
took
still have
me.
time, still have time.
Listen, the clue is, this stock isn't all that it used to be, even going back a week. This stock is not all that it used to be, or even all that it was on Monday.
Is the hint going to be all that glistens? Has someone got it? Put it up, put it
Poppy
up.
got it.
Hey.
Well done, Poppy. Anglo-Americano. I actually didn't realize it had got as low as £18, even 17.70 it looks like there. But yes, Anglo-American. Look, it's done absolutely nothing. If we manage to take that chart back, of course, you'd see a spike up to what was it, £28? So this is yeah, Anglo-American. Good one. Which reminds me, shall we have a look at Valterra quickly? So Valterra, remember the spin-off, which was Anglo Platinum, and you can see that one there bottomed on Wednesday on the close at 26.96, and it's now trading 7% higher. So there was a buying opportunity in this one this week. The stock really bouncing strongly.
And it says Anglo has about 20% interest in Valterra Platinum voting shares. I believe that's the figure, just under 20%. Let's have a look at some
of your bell, Ange?
Yeah, I got the bell right here. Someone's broken it though, Rich. I don't know who has, but someone has broken it over here. 8, 7.
Never has a new bell been needed so much.
5, 4, 3, 2, 1. Here we go. Right. Let's have a look. Whoa, we are seeing quite a lot.
Poppy just admitted that he cheated?
Poppy. Poppy.
No.
You can't use ChatGPT for this.
Oh, disqualified from all future Guess the Charts. Right, let's have a look at what is moving early this morning then. It is taking a gamble on N10. You'd be up 75 basis points this morning. NatWest up 30. And we'll just refresh Diageo on the downside, down 60 basis points. Obviously, a lot of people on the zero alcohols yesterday, last night, out and about in London.
Were you out about in London?
I was not. So, yeah, no non-alcohol drinks for me.
I had a 0% Guinness last night. So
did you?
That's one to Diageo.
Oh, okay.
Which is why I hold Diageo, but it's not been kind to me. Diageo's not been kind overall.
Yeah, £19.40. Last I looked at was £22.
Yeah, it's not done well, people. So I'm looking to come out of that one.
Right.
Let's have a look at some of the others on the losers list as well. Bunzl down more than 1%. Relex, this is one that I can talk about with Joachim when he comes in. Down almost 1% there. I have that in my pension. And also the Anglo's down 2/3% there. Poppy, you cannot use ChatGPT when... producer Phil says he's not happy about that. On the winners list, it's really shaking. SSE, darling, up 1.5%.
I think we need to zoom in there, Ange.
Yeah. Rolls-Royce also up 0.75%.
That's better.
And Smith & Nephew up 1% as well. Speaking of Smith & Nephew, for those of you that trade the space, Procter & Gamble coming out with huge job cuts recently. Joining the likes of Microsoft and Meta and all the rest as well. So it looks like, even in that safe consumer space, it's not exactly safe as houses anymore.
What is SSE on the year now? That's I'll get the chart up if you want to keep those prices up there.
Yeah. Persimmon also down slightly on the mining front. First Nilo down. It's up 0.5% rather. Persimmon up 0.25%. Let's talk...
nice 10%. SSE up 10%, and you've had a 2% dividend there as well.
Yeah.
So it's a strong one.
Some of the headlines out this morning that we haven't yet, covered, that's crossed the wires. Canal Plus confirming its EBITDA and revenue outlook is on track. It also said it at higher than expected cash level, and also interesting. Trainline said it's been selected by Rail Delivery Group as a tech supplier. Let's have a look on the German side. Here we are.
Yeah, just quickly on that before we move away from the UK. Away from the numbers, talking about legal in general at an interesting level. And Neil, you're absolutely right. We've got the big red move on the left-hand side was the announcement of the deal, and it came right back off again, remember? And now it's gradually eking its way back up the stairs, 256.80. I wonder if we'll see that 265 level again by the end of the year. That would be interesting.
Let's move on to Germany now, shall we?
Yeah.
Okay, here we are. Germany, here we go. I'm going to zoom in for you. Bayer leading the winners ball there, and Vonovia as well. Total up 0.75%. Andrew McKilvey, you Total Energies kind of person, can't remember, one of you is. Hanover Ray up 0.33%, and Rheinmetall still riding higher there. Let's have a look on the losers list. Infineon Technologies down almost 8% there. A lot of chip makers earlier in the week getting slammed, including Infineon and ST Micro as well, amid the tariff concerns. And Mercedes-Benz and also Porsche easing off there, coming lower, 0.5%.
We're just waiting to get a proper quote in Tesla. So remember, Tesla, if you ever want to trade at 8 a.m., Germany is your one to look at. But we're just waiting for a proper quote there. I've waiting for the PCMs to send me one through. I know Luke Moore watches the show on a Friday. He's going to send us through what the trading desk are seeing there. We think that is about right at the 282 level, because that takes us back up to 300 in the US dollar. So a strong rally in Tesla, because the bromance might be broken, but they might stop bitching at each other on social media after the peace talks later today.
Yep. And for those of you that were out on the lash or drinking 0% yesterday, just a reminder, those moves there marked by online tit for tat between Musk and Trump. US plans to scrap those tax incentives for electric vehicle buyers.
Now, platinum having a move today. That is interesting, up 2.3%. We haven't seen that for a while. Really, I wonder, is that on the death of electric vehicles?
I think so, because definitely, as our trader friends often remind me, and I say this quite a lot here, that we do have this big trend move, and you see it with the PGMs, you see it with platinum. EVs completely knocked off the agenda once Trump 2.0 started. The whole EV play
Can't be that basic, can it?
It's really, really tied to confidence, this market. And if you listen to the mood music out of Volkswagen, out of Porsche, out of all the big car makers, really, the ones that went big into EVs are the ones that are now hurting, and everyone's now scrabbling to move into the middle ground space, which are the hybrids, right? And back into offering petrol and diesel again, in case, this is a longer term trend. Monkey Man saying Lulu. Yeah, what's happening?
Oh, yeah, Lulu got smoked. What a shocking set of numbers from Lulu. But we do have Tesla Germany off and running. So 265. Let's see how that comes through. 265 times 1 spot 148. Is that where the euro is? $304. $304. So a strong bounce in Tesla. All I've done there is taken the European price multiplied by the euro dollar. So, you know, we saw, I think, $268 it was at the lows yesterday. So that gives us a 10% bounce from the lows in Tesla.
Why
already.
would you want to
I
short
think the
that?
studio's gone quiet because Dom's gone to make a trade ahead of the all sessions.
Yeah, he
He
does
loves
like
his
a bit of
Tesla. He says not anymore. Oil, let's have a look at that as well in the commodity space. Oil, let's have a look. I'm going to punch up WTI for you, down 0.5% there, slightly lower. But if you're looking at this from a weekly point of view, gains there on supply concerns. Yeah, so you're seeing it down 0.5%, but if the momentum continues, we could see this up around 2% for the week. We already talked about gold there, but copper, let's have a look at copper. Still struggling for a bit of direction there. Let's have a look at copper for you. We're still seeing that, you know, sideways move that has got a slightly upward bias, but it is still stuck in that range there.
Right, so back to Lulu. We know that Monkey Man interested in his expensive yoga pants.
It is very expensive, isn't it, for what it's worth?
I just bought a pair of grey jogging bottoms because the quality is very good. That's one thing about
Wash as well.
paying up. But it's funny, I went into the shop, tried them on, all good, looked at the price tag, went up and asked if there was any discount. And the guy went, no, not really at the moment. Are you a student?
Yes.
I like you. So I put them down and I went and I walked around the shopping centre and I thought, I'm talking about like £8 difference or something, you know? So I went back and they were still laying there in the same place as I left them. So I did bought them in. But clearly not helping the numbers because the expectation going into numbers was 258 and it did come in at 260. So just topping earnings, but the guidance was ugly.
Yep, and also the fact that you know that T word kept on coming out. For those of you that read on what the expectation was, the T word was tariff-related costs. Tariffs, higher tariffs. You know, a lot of this is starting to really bed into the outlook story. Lululemon not being left out of that. Its shares fell some 22% post-market.
It's an interest because it was, so they adjusted guidance down to 1458 to 1478. That was only about a 40 cents cut, right? So a 40 cents cut is what, about 3%? So they cut numbers by, so let's say 4% at worst, and the stock drops 22.
Yep.
It's incredible. Let's have a look at how
being punished, and we've seen the punishment continue this morning. We've already seen Jeffries cutting their price target to $200 from 220, and also Cohen also cutting their target price to 321 from 373. But I do agree with you, it seems a bit harsh.
it's an easy one to dislike though, because they are so expensive.
They are very expensive, but Frank Caberna is a firm holder and fan. I say he talked about it so much when he was here.
He did.
He did, and he says that because they last so well, he's even asked Tasty if, you know, if there's any incentive that they can have a tie-up with Lululemon to get more of their gear.
Right, anything else you guys want us to look at before Joe comes and joins Angeline for the morning? Let's take a quick look at what else is happening in Europe.
Put in your questions here, and also slam the hit and the like button. There we go. You can see it right here in between Rich and myself. You still have, there. You still think we didn't plan this, the pointing, but look at the coordination there. But you still have time to get us to producer Phil the figure we need today.
Yeah. Jokes aside, it would mean a lot to us if you could hit that and hit the like button as well. Yeah. So yeah, the thumbs up, not the love heart. You can give us love hearts if you like, but the thumbs up is really useful. Yeah, okay, so the read-through from Lulu. If people aren't spending on expensive clothes, are they spending on Adidas trainers? So Adidas showing down 1.2%, Puma showing down 1.7%, and you see the rest of the European losers there as well. On the upside, we are Ubisoft buyer, SocGen, RWE, nothing really to speak about. Havas, perhaps a little bit of the Canal Plus effect there as well.
Yep. Certainly the cost of living crisis is not affecting the McDonald coffers, because every time I look over, he's got new kicks on. Are those new?
The Hawkers.
Ah.
No, these, I just don't normally wear these to work, but I thought I had to run to the station today. So.
Ah, okay. Right, so let's have a look at Adidas shares. What I want to add, though, for those of you trading Adidas shares, is from a technical viewpoint, we have seen quite a few red candles since the 27th of May. So to me...
Which is when we went short, Angelique.
Yeah, precisely. And, you know, this is a pattern that is one that technicians really like, because it's very consistent, you know, red candles every single day. And now with Lululemon's news as well, you know, this implies that this is going to continue sinking further. Other news out there, let's have a look across. We're still seeing, let's have a look at the bond markets, because we talked about this quite a bit yesterday with Aaron Bright. And at that point this morning, we were still seeing longer term, the longer end, creeping towards that 5% mark there. Here we are.
Just spotting as well, FTSE is on a tear here. FTSE up 28 points since 8 a.m.
I have to do the click thing, guys, because sometimes the FN11's the other screen.
Come on, Ange.
Here we are.
4.88 on the 30-year.
Yeah, here we are.
4.88, down from that 5.01. What is it going to be at 1:35 p.m. today?
We'll find out. And we got Joachim coming up next, so we can talk to him and get his call on that as well. Producer Phil, you're writing down all the calls for the jobs number as well, aren't you?
Just a quick question there. Jugger's saying Monday is a holiday. What holiday is on Monday?
Huh.
No, we've just had it, haven't we?
Yeah. Is there something happening in the US, Jugger? Or are you...
We'll find that out for you. But I thought we had holidays last week.
It's the Germans and the French.
Oh, it's a European bank holiday. No. Forget about it.
Yeah.
Important markets are open.
We are here. We are here, and we'll be ready to go on Monday. Right, on that note, let's bring in Joachim Clement from Libra. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding,
it comes with risks. Always trade within your means and never risk more than you can afford to lose.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back. And we have Joachim Clement from Liberum joining us here to talk all things infrastructure, trading, Germany, ECB, the bond madness as well that we've seen recently, and that you've now returned to after your holidays. Welcome back. How are you?
I am good. I'm good. Can't complain, especially after last night when we got the best movie of all time.
Oh, yes. High drama. I mean, I agree with Monkey Man. I kind of thought, you know, we'd reel out the popcorn a lot sooner than this. I feel like...
No, actually, I said it's like we all expected it to kind of like within 6 months, it's going to be a messy divorce, and yesterday was just too much fun.
Which is why I meant I thought it'd be earlier because, you know...
It's 6 months. It's 6 months now, so we're just on time. It's okay.
Yeah, and, you know, do you think... I just would like your view because we've had, you know, lots and lots of different... comments here, some saying that, you know, it's the start of the end. Some of them, some comments I've had mailed through. Thank you, those of you that emailed me, the fact that this is yet another piece of the drama that has been agreed and they're just letting play out because, you know, whether it's good news or bad news, any headline news is still news for the Trump and Musk.
Well, I think for Donald Trump, it is definitely something that he enjoys. It's kind of his modus operandi. For Elon Musk, I'm a bit more doubtful. Turns out he actually needs those EV subsidies in the US. And if they are cut out of the budget bill, that is really a major problem for Tesla going forward. And so the reaction obviously was to call the president a pedophile, which clearly is a very elaborate investor relations strategy that the market so far doesn't understand. But we'll get round to it and we will finally understand what the bigger plan is behind that.
Or the lack of PR strategy.
Well, we know Elon Musk doesn't have a PR department, and he is the PR department. And for better or worse. So yeah, it's going to be fun. It's going to be a fun ride.
It's going to be a fun ride indeed. What is your expectation of what's going to come out from the expected talks between the two later today? Apparently it's slated, a phone call has been reported because maybe these two can't be trusted in a room together.
Well, it's definitely going to be a phone call. And I think given where we were yesterday, things can only get better. We see that already with Tesla opening higher this morning in Europe. But to be perfectly honest, I think it is a situation where the relationship is broken and where the fallout is going to be probably at the beginning worse for Elon Musk and his wealth. But in the long run, we have to remember that no matter whether Elon Musk loses 50 billion or 100 billion in wealth, he's still the richest man in the world. And his threat to open up and start a new party could be a real danger to Donald Trump and the Republicans.
Counting down to, of course, the all sessions there, and you saw Rich live on the show calculating the expected move back once all session starts. He did that simply by looking at the German shares and timesing it by the currency conversion. We're looking at the Tesla all sessions stock here on the platform. All sessions, of course, a great product here at IG because you can get ahead of the game, and that is going to open in just under 30 minutes time. Just showing that to you because to show you the action in this is the hourly chart action in the previous session. Let's shift gears here to another big country that really relies on EVs and especially autos as well, Germany.
Yep.
And you know, you're very excited by the infrastructure play. Talk us through that.
Yeah, so I think, so everybody, when you talk about German manufacturing, you think about German cars. And to be perfectly honest, that's the last place I would invest these days. But actually where the big moves are going to happen, in my view, over the next couple of years is with German infrastructure. Earlier in the year, the Germans changed their constitution and built in a 500 billion euro infrastructure fund. So over the next 10 to 12 years, they're going to spend 12% of their GDP, 500 billion euro, on infrastructure. It was notable that at yesterday's ECB meeting, Christine Lagarde at the press conference said that, like, yes, we're at the moment at a weak spot for the European economy and for European inflation, but the pump has already been primed. So the acceleration will come, and she explicitly mentioned infrastructure and defense spending. Now, defense spending, everybody is already on that train. Yeah. The infrastructure spending train, I think, is still somewhat in the background, and that, I think, gives a lot of opportunities, in particular in companies that benefit from infrastructure spending in Germany.
So I have a watch list of infrastructure funds, but take us through some of the ones that you are interested in. I think you mentioned Geberit, is that one?
Geberit is making, obviously, toilets, bathroom appliances, and things like that. And Strabag is an Austrian infrastructure company that makes roads, bridges, and the usual stuff.
Right.
I think the interesting thing about the German infrastructure spending bit is that if you look at a traditional infrastructure fund, the stocks that are in there hardly have any exposure to Germany. They are typically French infrastructure companies like Vinci and Eiffage, and yes, they will benefit as well because Vinci makes some roads and will be asked to build some roads in Germany. And Eiffage is a darling of mine because it pours the concrete foundations of wind farms and windmills and has been doing really, really well recently. But where it gets really tricky is when you want to have really big exposure to Germany that drives the top line of the companies and of the profits. And you see here Eiffage has been mostly moving sideways recently. But it is something that I think is improving fast as the order books are filling up there. Now, when it comes to getting real exposure, you have to look a little bit outside the simple ETFs that are investing in infrastructure, because most of German construction is either not listed or very, very small.
Yes,
so they don't show up there.
Yeah, and what's interesting about that is every time I speak to someone who trades this space, it's very, very dispersed.
It's fragmented.
Yes,
it's a highly fragmented market,
Which I find ironic because everyone I speak to about the build quality and the talent in construction there has said it's, you know, incredible. It's just, you know, out of this world. It makes everyone here look like cowboys.
Well, I'm German and I live in the UK, and there's this saying that what...
He sometimes complains about it to me.
Not just sometimes. I mean, there's this saying, what the British call renovating, the Germans would call painting.
Yes.
It really is a very, very different category and quality of infrastructure in Germany. Germany than
Come on,
it
let
is
it all out now. Let it all
Yeah,
out.
no, it's just the second best in Europe after Switzerland, which is even better than the Germans. But the Swiss don't have an infrastructure package that they need to spend because their infrastructure is working. The Germans over the last 10, 20 years since the financial crisis have neglected their infrastructure, and now they need to invest a lot in order to replace a lot of ancient and aging infrastructure, whether it's roads or even the digital infrastructure and the fiber optics networks and things like that. And the fun thing is that construction tends to be extremely local. In Germany, more so than in other countries.
Yes, and if you're building a town, for example, you get all the builders from that village and from surrounding villages.
Yeah, no, it's a miracle how the city council and the local councils are all filled with the local builder. Because if there is an infrastructure project that is coming down the road, the local builder wants to have the inside scoop on how to kind of bid for that in order to kind of get the local contract. So it is very fragmented. It is somehow very strange. But when you go to the national level and move up from the local level, and into the national level, when it goes about autobahns, about bridges, about airports, etc., that's when some of the bigger names come into play. And traditionally, most hedge funds and that I know have played it with Hochtief, which is Germany's largest infrastructure company.
Yes, I have Hochtief.
You have Hochtief, that's good. Hot is the ticker, I love that ticker. But the problem with Hochtief effectively is, as you can see here, it rallied a lot in January, February when Germany passed its infrastructure bill, and then crashed a lot in April and May. And why is that? Because 40% of their revenues come from the US. So now you have a company where half the business is brilliant, that's the German side, and half the business is really in a bad shape, and that's the American side. So I really struggle getting to like Hochtief, because the US bit is just too much anxiety and too much uncertainty for me there. Where things get really much more interesting is Strabag. Austrian company. You won't find it in any index because it's 90% owned by the family and places like that. But it makes pretty much all of its revenues in Germany and in Austria building roads and building traditional infrastructure. And that, to me, is the #1 stock to use if you want to get German infrastructure exposure.
So essentially, Strabag is like Autostrada, is that right? Is it similar?
Technically speaking, yes. I know what you're aiming for, because Italian roads and bridges aren't the best in the world.
Yes, I still recall that, Autostrada bridge crisis. It's still gives a shiver down my spine, because I have driven across that bridge. I've gone to Genoa many times.
Yeah.
But then you said, well, that's pretty good. Like, last
Come on,
10 years.
they haven't had a bridge fall down in 10 years, so that's quite all right.
My goodness.
I mean, that for Italian construction companies, that's quite a success.
All right. Hopefully Strabag is better. Its share is certainly in an upward trend there. This is the daily chart, trader friends. And, from January, we saw that, hiccup in April, but, many stocks, let's be honest, had that hiccup in April. It's now back up on that upward trend there. What's with that strong volume spike on Tuesday?
That was the result.
I see. So just looking this up, because this is not one I am familiar with.
Hardly anybody is, by the way. It's one of the most undiscovered stocks anywhere, because it is not in the Stocks Europe or the MSCI Europe indices. People don't look at it because only 10% of the stocks are in free float. Or 15% to be precise.
Nice.
But it is, as you can see from the chart, it is in a very, very strong uptrend. It has all the fundamentals on its side, not just now, but actually for the next 1 to 3 years.
Nice. And you were saying that this one is special in that a lot of it is family owned. Is that right?
It's owned by the family and by the local region in Austria. So it's 3 major stakeholders with each about 30% of the shares. And yeah, it is effectively controlled by the family that owned it from the start.
Right, our Sachs, if you're on the show like you are every day, just calling out a really cool thing that our Sachs also notices when we talk about stocks like these that in particular are family owned, or you know a family has a particularly large stake, it's always good to understand, you know, who's selling, who's buying, what that action is in the background, because that will matter probably more than, you know, what the, or as much as what the market is doing at that point. Jagger, who I believe is also German. We've got a lot of German viewers and traders here. Jessie14 is also from Germany. And Jessie, I've sent a bag out to you, so you should be getting it soon, depending on how fast Royal Mail is. Jagger saying, but if you count internet and telecommunication as infrastructure, then there is some lack of that in the East, because the East tends to be more rural.
Yes, absolutely. And this is why I, in general, like some of the big cable manufacturers in Europe, NKT, Nexans, all these guys. The problem with them is, well, actually, there's not a lot of problems with them. They have a very pessimistic outlook by analysts at the moment. So it's very easy to beat expectations. And they have sold off quite a lot in April, because they rely a lot on Chinese components, and the tariffs might actually drive their costs quite a bit higher.
Right.
But a lot of those cable companies are now bouncing back strongly. So I would say on a 3-month horizon, they are a really interesting place to look at.
Let's talk about Siemens.
Yep.
Yeah, because I know this one's close to your heart. Siemens has had quite an interesting time recently. Just adding that to the workspace to show you. Like many others, it had that
massive drawdown.
puke out, yeah,
Yeah.
around March and to early April, and then we saw it climb again before consolidating from around mid-May. Level. It's now doing that slight trickle lower.
Yeah.
You know, from what I can see as well, Siemens should benefit. They should benefit from Germany, you know, saying we're going to spend, and loosen our coffers.
Yeah.
But when are we going to see this, you know, really lift the share price again? Because right now it's just looking, it's going the wrong way.
Yeah, so at the moment, it is consolidating, and we've had German industrial production numbers this morning, which were quite a bit weaker than expected. So there is still some weakness in German manufacturing. I would say there are several things to note. First of all, Siemens owns about 20% of Siemens Energy, the wind farm maker, which has been rocketing for years now, 2 years now, basically. That is going through the roof, and that is one of the key beneficiaries. What makes Siemens interesting is the mobility division, which has extremely high margins. Basically, the mobility division, for those who don't know, they are very much engaged in making trains, train carriages, locomotives, stuff like that. And that obviously is going to be a focus for German infrastructure spending, because as I saw in the comments, Stuttgart Hauptbahnhof is one of those major money pits all over Germany. And yes, Strabag was involved in that. Siemens will build the trains that go into the German train railway system, which is in a desperate state. 20 years of underinvestments. German train system is by now as bad as the English one. And
He's got to stick it in.
Hey, England, the UK is the only country in the world where every train station has a fixed stop for replacement buses. Okay, that doesn't exist anywhere in the world, which tells you something about British trains. Anyway, so Siemens, the mobility division is really, really key. And there are persistent rumors that they might spin it out at a 16 billion euro valuation at some point this year or next year
They
in
keep
order to
talking about this, though.
value.
They keep talking about this, Joachim. The problem is I've never seen a firm date. They keep talking about the spinning off of that division.
But the interesting thing about Siemens is Siemens has a track record of spinning out its subsidiaries.
This is
Siemens
true.
Healthineers, Siemens Energy.
What a terrible name, Healthineers. I mean, whoever thought that up?
Some
You are
PR
right.
agency.
They do have a strong track record. One thing that I would say concerns me, I like the mobility space, but they are extremely, extremely reliant on the US for that market as well.
Yes.
So my concern there is, with what's happening in the US right now, that they're not going to get those contracts come through for Siemens. So to me, this means potentially more downward pressure just because they're so reliant on the US market in that space.
I would disagree because our leading indicators, which work particularly well for Siemens and the mobility space, show that order books are filling up. And that the new orders are coming in, not so much in the US, where things are indeed deteriorating, but interestingly in China and in Asia. Export orders are coming from that area, and Siemens in general, as well as the mobility division, are actually also benefiting from that uptake in China and in Asia in general. So I would say that the uptick in Asia balances out the weakness in the US, and what you're left with is the exposure to Germany and Germany's infrastructure.
Right. Producer Phil, how much time have we got? Oh, can I just squeeze in a pair trade? Go on then, they say. So a pair trade, I'd love to know what you guys think, trader friends, because a cool pair trade, if you wanted to do Siemens and you agree with Joachim that, the mobility side is going to lift this and the Asian side will offset the weakness in the US for mobility, then you want to go long Siemens, but then ThyssenKrupp is one that's looking like it is in pain. So this is what I mean, Producer Phil. When I do F9, F11, it hides my search button. ThyssenKrupp here, putting that back in, and look, ThyssenKrupp is marching lower. ThyssenKrupp recently came out with numbers 90% far worse than expected in terms of its earnings and uncertainty and economic cost cutting is some of the things that it has said is behind the earnings outlook. Right, that's all the time we have left, but we're going to have Rich coming in with Joachim, so stay right there, grab your coffee, and we're going to have a macro roundup with these two.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
And welcome back. So we're going to dive into some macro chat. Joe, first time that we've been on air together.
Yep.
I'm very excited.
Same here.
So let's go US, right? Because we know that that's what drives the world.
Yeah.
Now, we have seen a move recently out of US into Europe, but do you think that's the start? Do you think that's just the top of the iceberg?
I very much think so. I compare it to the post-2000 situation. There are a lot of international investors, and in May, I've been 3 weeks in Asia talking to big sovereign wealth funds and global pension funds and stuff like that. And they all were suddenly looking into diversifying into Europe mostly. Asia as well, a little bit, as long as it's not China, but basically taking some chips off the table when it comes to the US, where their portfolios, because of the strong performance in the US, have become increasingly concentrated. And now they wanted to kind of reduce the US exposure a little bit and moved it to Europe mostly. And I think that's going to take 2 years, 3 years.
It does, and even by nature of S&P going up 26, up 25% 2 years running, and the stronger dollar, they might not have even had any changes, and it's just become a much bigger part of their portfolio.
If you have as a benchmark the MSCI World Index, the US market share in the MSCI World has gone from 60% 10 years ago to 73% in March.
Wow.
So if we only just take it down to 70 or 65, that will do two things. First of all, it will boost from the inflows European stocks and Asian stocks, as I said. And then the second thing is it will continue to weaken the dollar. We know from in 2000 when US share in the MSCI World went from 55 to 60% in 5 years, something like that, and then went back down to 55. That took about 2.5 years and devalued the dollar by about 8 to 10%.
Wow.
So if you are taking it down now again by 5% in the share, just the reallocation of money drags the dollar down by another 5 to 10%.
Right. And how the relative valuations between something like Germany, that we've already seen a big move, and the S&P, how are the relative valuations?
So at the moment, if you adjust it for sector composition, because the US obviously is more expensive because it's so loaded with tech companies. And even though a lot of those big tech names have degraded quite a bit and are now cheaper than they used to be, there still is, on a sector-adjusted basis, about a 30-35% discount of European stocks versus the US. Yes.
Even, and is that just Europe, or does that include UK?
That includes the UK. The UK is a little bit more. If I would take the UK out, it's probably somewhere in the 27-28% discount. But we're talking about a serious discount that is larger than most of the time we had over the last 10-15 years.
Yeah, and that's before you start to put in the German debt brake coming off. And the tailwinds that will give.
I mean, the reason why that discount existed was because Germany lacks productivity, or not just Germany, Europe lacks productivity, lacks growth. If you wanted to have growth, you had to go to the US. Now, what has changed since then is not that suddenly Europe has become much more productive and the bureaucracy has kind of disappeared. No, we're still good at that. It's like the number one export of the European Union is regulation, and we're still doing that. But the thing is, with the defense spending and then the German infrastructure spending, we're throwing so much money at the economy that it overwhelms, at least for the next 5 years or so, it overwhelms that regulatory drag.
Yeah. Well, let's take a quick look at the expectations for S&P forward earnings. So we've got the nominal versus the real there, but then the actual underlying figure, we've got, now where are we? There we go, 275. So that is, the red line is the expectation for 25. And then we've got those leading economic indicators there in the dotted line. Why aren't we seeing more concern around the market and what's priced in relative to those leading economic indicators?
Well, your guess is as good as mine, because there's an awful lot of over-optimism, especially when it comes to the US stock market right now. Our leading indicators show a similar picture. Earnings in the US should start to fall in the second half of this year and then into 2026.
To what magnitude, though?
Well, we have over the next 12 months some 5% earnings growth in the S&P 500 versus the 10% that analysts' consensus is at the moment. Roughly.
Okay.
So it's not super bearish. It's not a situation where we are forecasting a massive earnings recession.
Yeah.
But it's definitely some downgrades coming, and that should put a lid on share prices.
And what about in 26, though? Because that 300 number that gets banded around, that is why the S&P keeps gravitating towards the 6,000 level.
Yeah, and that has to come down, quite frankly, because I think if there is a recession risk in the US, it is not in 2025, it is in 2026.
Yeah.
Because what we get in the second half of this year is we get this one big beautiful bill act, hopefully passed, and those tax...
Hopefully.
Well, it depends on your view, but what it does is it will keep the mood up. Because an extension of tax cuts should boost the economy, even though it is effectively creating 2.4 trillion in extra deficits over the next 10 years, which means that treasury yields will have to go up and will eventually start to bite when it comes to stock market valuations.
And that was my next question. What are the repercussions of that when we're already seeing Jamie Dimon come out and warn that the bond market will have a wobble, as he so politely puts it? What
he has to put it like that.
And it was amazing that he was even so kind of vociferous on that. But what does that 30-year do if we start to see the debt number move through 37 trillion, the deficit expectations blow out?
Yeah, so we now have increasing evidence that investors are asking for a risk premium on treasuries. And that risk premium has been growing basically since the pandemic. It's been increased by about, estimates vary, our estimate is about 1 percentage point. So basically in the pre-pandemic world, the 30-year treasury would be at 3.8 now instead of 4.8.
Yeah.
The estimate from the uncertainty around fiscal policy and trade that we have now is that it should move treasury yields up by another 30 to 60 basis points from here. So we're talking 5.2 to 5.4 for the 30-year treasury.
Wow.
That is quite a meaningful move. And what it does is not only will it become a major wobble in treasury markets, but it will also mean that costs for financing projects, etc., will go up.
Yeah.
And that is then reflected in big infrastructure projects like data centers. Microsoft has already cut back on its investments on data centers because of a lack of demand. Well, guess what? If we have to pay an awful lot more to build those things and to invest in AI, that is going to curb demand there as well.
Can AI make up for that, though? Chicken and egg situation. If you build the data centers, does AI boost the productivity enough to keep costs lower and profits high?
That's what we're all trying to find out. And there are two camps at the moment. There's, on the one hand, there is the AI bullish camp, which says that it is a revolutionary technology. And I completely agree that we've got some experiments where in tech, in software programming and things like that, it increases productivity by 30% or more. What that also means is that a lot of programmers are going to lose their jobs.
Not just programmers.
Yeah, all kinds of people are going to lose their jobs. So that's a problem there, because it means that there's a lack of demand in other sectors. And then there's the more bearish camp, which is Darren Acemoglu, who won the Nobel Prize last year for economics. And he says that over the next 10 years, the cumulative productivity gain is 1%. So that's 0.1% per year over the next decade.
That's dreadful.
And the reason is that he basically says, look, AI creates a lot of productivity gains, but in very small niches. You know, if you are a bricklayer, you don't have to be afraid of AI because ChatGPT is not going to build a house for you.
Right. So the real economy.
The real economy is not affected by it.
But the real economy is not represented in the weightings of the S&P 500.
Correct. And the S&P 500 is obviously geared much more towards technology and services in general than the real economy. So that gives the S&P 500 a little bit more leeway. The question is, will the drag in other sectors become a problem for the tech sector as well? And will the financing costs that are going up as treasury yields are moving higher, will that become a problem for the order book of NVIDIA and Microsoft and the like?
So the move in treasuries would strangle the Russell 2000.
Yes.
Would it kill the Dow as well?
Oh, that's a good question, because I'm honestly not looking at the Dow that much anymore.
Yeah.
It's an obsolete index in my view.
No, I completely agree.
It will definitely, because the Dow tends to be much more in real economic stuff. So in industrials, in utilities, in kind of real stuff. And because that's where the weakness is, I would say it will strangle the Dow as well.
So a lot of job layoffs.
Yeah.
Unemployment, does it move towards 5%?
No, it's not that much.
Okay.
Because what we've learned over the last 5 years, in particular with the inflation bout and the fact that as interest rates moved higher and the Fed hiked dramatically, unemployment rates didn't go higher that much. And I think that is because we live in a world where instead of opting for unemployment benefits and registering as unemployed, especially now with the tax bill and the budget bill, which is reducing a lot of the benefits anyway. So what's the point of registering as unemployed? You instead start your own business, you start a gig somewhere, and so you never show up in the statistics, in my view. And the end result is that we do see a little bit of higher unemployment rates, but by far not something that is particularly.
So then Jerome Powell doesn't have the reason to cut. So is the next move an increase?
I'm not quite there yet, but I am very much, I'm definitely in the more hawkish camp than what the market expects.
Okay.
We've been, and I've been in more hawkish, both in the UK, Europe, and in the US on interest rates than markets expect since the start of this year, because I think that the inflation bout that is coming now, and in the US it's driven by tariffs. And even if we get deals and we stick with the 10% tariffs that we're having at the moment until the 8th of July, and God knows what's going to happen in late June, early July.
Yeah, or this afternoon.
Or this afternoon, for that matter, for this afternoon, yeah. But even if we stick at that, we get a 1 percentage point inflation boost to the US inflation number by the end of this year in our estimates.
Okay.
So the Fed is dealing with a weakening economy and higher inflation. And the question is, what do we focus on?
Yeah.
And my conviction has always been that the Fed will focus on the inflation bit first.
Right.
And the reason is that we just came out of an inflation bout where the Fed has lost a lot of credibility as an inflation fighter, and where they have to worry about inflation expectations becoming permanently unanchored and people changing their behavior.
And a second bout of inflation would do just that.
Exactly. You see it already. If you look at University of Michigan consumer sentiment, that chart has been bandied around everywhere, where you look at the inflation expectations over the next 1 year and 5 years. And the next 5 years, the independents, because there's a massive switch between, or massive difference between Democrats and Republicans. Democrats expect like 8% inflation. Republicans expect like 0 inflation.
Yeah.
But if you look at independents, they expect 4.5% inflation on average over the next 5 years. And that is a major problem. That is way too high for comfort for the Fed.
It just doesn't quite tie into an AI productivity gain world, because that is your cost coming down.
Yes.
If we're going to get that kind of inflation, it's from companies increasing their profit margins.
No, it literally comes from companies paying more to import goods from everywhere around the world. And then the question is, do we have enough translation into services costs? because that's really where the inflation then becomes sticky. If services companies have to increase their prices. And I do think that if you look at it, a lot of the services that we use at the moment are tech related, which means that they are also related to the costs of spending on chips, on AI, etc. And companies will have to pass these costs on to the end customer. And that means services inflation will move higher, and that makes it sticky.
Did the ISM services number this week, was that a canary in the coal mine?
Yes, I think so. I think actually if you look at the prices paid within the ISM services, that's been moving higher basically since October last year. And that was the reason why I am much more hawkish since January, February, simply because it's like the pipeline of inflation pressures is coming through already before the tariffs have been enacted.
Yeah. Fantastic. Joe, thank you so much. That's a real download ahead of non-farm payrolls. We just have to ask you, what's your prediction for the payroll number expectation?
Worse than expected. I don't give you an exact number, but the ADP number on Wednesday was a real wake-up call. That was 120,000 jobs expected, 47,000 jobs created, so about a third of what was expected. And, you know, that is not a perfect leading indicator, but I'm pretty confident that if you get 1/3 of the jobs created on Wednesday, you're not going to get anywhere near the numbers expected on Friday.
And market will throw its toys out of the pram on that.
Absolutely.
Good. Right, all to play for this afternoon. Thank you so much for coming in.
Thanks, Rich.
Join me in 2 minutes with Elliot Harris to bring you the All Sessions Open. Where's Tesla going to trade?
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and here we are, straight in for the long-awaited All Sessions Open. Elliot Harris, what did you make of last night? How much fun was that?
Good morning. That was some fireworks, eh? What you can see, it's open. Oh, that's quite a bounce, nearly 5%. That is some move.
Yeah, we are 298, so right on that 300 level. It's all right. All is forgiven. They're going to have a nice little phone call this afternoon, aren't they, Elliot? And that's going to be it.
Go for lunch. The best pals again.
What would you give to be a fly on the wall, or I don't know what the equivalent on a phone call is?
It's just two kids in the playground. Oh, I don't like you. I don't like you, and yeah. All is forgiven by the afternoon. It's just crazy stuff.
It was only this morning that I thought, was this a genius ploy by Musk? Because he destroyed his reputation being Trump's puppet, or perhaps Trump was his puppet, I'm not sure. He lost a lot of his faithful Democrats, his liberals. Was this a ploy to get those back on side? Or did he launch his political career for 3.5 years' time?
I wouldn't be shocked to see the latter. I really wouldn't. Yeah, maybe we just need to wait and see some hefty volume going through on the Tesla 6-month calls. Yeah.
Yeah. Oof. Well, that would be interesting. Right. So 296 traded. Nvidia just holding its head above water. It's the only game in town, really, is Tesla. And on the downside, of course, Broadcom down 3.5% on those lackluster numbers. And Nike getting hit on the back of Lululemon. I'm not sure. Is that a Lululemon top you got on there, Elliot?
No, this is a polo top.
Nice.
Yep.
Representing. I'm not sure Lulu has a read through to Nike.
Slightly different target audience, I would argue.
Yeah, and a bit either or as well. But yeah, we're certainly seeing that repercussion there. And Nike had a good day yesterday, so understandable. Right, let's get on to non-farms then. Forget these old sessions. What is your guess for this afternoon, Elliot?
Biggest one in a while, I would say. Expectation, I think market consensus is about 120, 125. Estimates are ranging from 75 up to 190. So there's a fair bit of vol around there. Both would come as a major shock. I know your previous guest just before, he saw it coming in slightly weaker. I may be slightly on the other side of the fence. I think it might come in slightly higher, maybe 130, 135.
That's the only reason that I think that you could be right there, is that the non-farm has been so stubborn to come down that we haven't seen any indication of a really weak number yet at all, have we?
Not yet, no. Obviously, the ADP was very weak on Wednesday, so that's a concern. But yeah, the overall headline figure, it's been pretty resilient. For me, firms, there's so much uncertainty still out there. I think firms maybe aren't letting people go quite as much as what some people think they might be.
Yeah. I mean, I guess the ADP gave us a bit of a clue, but the jolts didn't give any indication that they're stopping hiring.
No, exactly. So it's a real trade-off there. Yes, it's been quite a mixed week for data. Yeah, the unemployment rate also very key as well. 4.2% expected. Wouldn't be shocked to see 4.3 maybe.
I think we're on the same bus on both guesses there, Elliot. And
you can be right sometimes. And obviously that all leads into the Fed. What, July cut now, 67% chance of no cut. That's increasing every day. September's now priced in loosely a 50-50, I believe. So we'll see a shift in that, I think, after 1:30 today.
Well, yeah, we'll see a shift in that, right enough. But the June Fed, how you do the projections, you know, there's just so much left to play for. Whether the big bill goes through, you know, whether you start to see the slowdown bite, what the tariffs are. It's almost impossible to do the SERP, isn't it?
Yeah, for June will definitely come a bit too soon. Today's number, are we going to see any tariff effects? Maybe the first signs of any filtration into it. I still think it's maybe slightly too soon, but we're getting to kind of the nitty-gritty when they're going to have to do something. Yeah, so they can't sit on their hands for too much longer.
Talking about nitty-gritty, what was your favourite tweet of the night last night?
I wasn't actually following. I had a catch-up with some old IG colleagues that I've not seen for about 10 years' time. So
nice.
It was a great evening.
Thanks for the
invite.
Lots
of old stories.
So I think the favourite one was definitely, well, calling for the impeachment was pretty out there.
That's pretty strong. I also saw the one about Epstein. Yeah, that was a bit strong as well.
Yeah, and that's what I mean by how intentional was this from Elon? Because you don't throw a tweet like that out, you know, which was suggestive, and there's absolutely no evidence that that's the case. There's you know, there's no suggestion that even if he was in the files, that there's any guilt there, right? So that was a really intentional tweet from Musk, that either, as Trump says, he's gone crazy, or he's doing it to launch his political career, or to bring Trump out and have a really forceful, you know, open argument.
It was certainly a hefty grenade thrown. I think we can say that for sure.
Right. So yeah, how does it feel to lose 36 billion in a day, do you think?
I read it was 150. I thought it was 150 billion that got wiped out. Well, but
Musk personally.
He's cut. Yeah, exactly.
36 billion, which is what he paid for Twitter, I think, wasn't it? That was near on.
Wow. Probably kind of me to dropping a tenner out of my wallet, I would think, and yeah, some sort of annoyance.
Now, going ECB, we saw yesterday. Yeah, much of a muchness. These currencies have been strong, haven't they?
Yeah, FX vol, I was looking at earlier. 1 month vol's down around about 0.75%. FX vol is interesting because it's where IV has fallen the most relative to RV. So realised vol on euro dollar has been pretty punchy in the last month or so. For most majors, IV is a discount to RV, which we've not seen for a little while. You certainly don't see that in index options. Index options, you will always have IV that trades over RV. Mm-hmm. Explicitly also, sorry, just bear with me 1 second. Sorry, just don't come through. If you compare that to oil vol is 1 month IV is trading roughly 12 points over RV.
Really?
So implied vol is extremely rich in oil. So in terms of all the asset classes out there, that would be richest.
Okay, let's have a look at that. Have you got any feeling on oil at the moment? It's certainly bounced off that 60 level, hasn't it?
It has definitely bounced off that 60 level, yeah. Seen some decent selling of premiums, actually. So that kind of correlates to exactly what I just said.
Yeah.
The premiums are looking richer than they have done, and we've kind of been stuck in a little bit of a range the last week or two. Yeah, so for me, I don't think we're really going to break out. I don't see us testing that 60 again for a little while.
Oh, that's interesting. It has really struggled to hold a bid. So above 65 would be a bit of a surprise to me.
Yep. Yeah, I think we're going to stay between this $60 and 65 for certainly the next couple of weeks. That's what I would expect.
Yeah. But then, other commodity world, what about silver yesterday?
Silver, what a blockbuster that was. Wow.
Hi-yo, silver.
The keen watchers might remember 2-3 weeks ago I came on saying that I did a little piece with Ange about how silver is often slow to track any gold move. So gold had actually posted new highs. Silver hadn't reacted yet. It sure caught up this week. Up 4% yesterday, up 8.5% on the week. It's hit a 13-year high.
Is it really?
Very, very strong.
Wow.
Seen a little bit of a shift in the skew in the term structure, mainly on the top side. So now they're beginning to price out a breakout. For me, if we hold above $35 an ounce, I really can see us testing $40 possibly by the end of the summer.
Wow. And yeah, you guys have smashed that. Both you and Matt Arbour we've seen a 10% rise since you highlighted that. So spot on, gents.
We can be right sometimes.
It's almost like the two of you have been doing this for 50 years.
Well, actually combined at IG, he's 50 years. I'm 21, nearly 22, and he's probably 27, 28, yeah.
When do you get your watch?
A lot of experience there. Huh?
When do you get your fancy watch?
Sadly not, no. No such thing.
Good stuff. Right, Elliot, wonderful as always to chat, but what about down to the important stuff? What is the trade of the day on the S&P options world for non-farm Friday? Let's have a look at where the dailies are pricing.
Let's have a look.
Whoa.
Yeah, vol's been crushed a lot this week. S&P vol's probably down 2 or 3%, I would say. Obviously today, this is the biggest non-farms we've had in a little while, I would say, certainly for the last 3 to 6 months. Implied vol around 28%. That's maybe 3 or 4% higher than we have seen for the last couple of non-farms.
And just take the people through exactly what that vol means for those that aren't au fait with options.
Yep.
And then how you get the expected move of the day.
Expected move of the day, that's the calc we did about 6 months ago, didn't we? Where you do a calc over, you can either do over 365 or over 250, depending if you want trading days or calendar days. But loosely, if you add up the straddle, so you take the call and the put, so let's say you take the 59.60,
okay,
loosely 24 on the call, 23 on the put, gives you 47. 47 divided by where S&P is 59.60. So you're implying roughly a 0.8% move today.
Okay.
Which is, yeah, it has been higher, certainly the back end of last year. That was probably guessing on maybe slightly over 1%. A CPI day, certainly back in the day, maybe 12 months ago, you were probably pricing in 1.5%.
I'd almost.
Yes, I would say the last couple of
actually.
non-farms, the move's been roughly between 0.5% and 0.75%, and today we're up at 0.8.
Yeah, I think. Do you know? I'd almost be happy to buy that straddle, but then sell some wings against it.
I'll pay for it. Yeah.
To cheapen it down a bit.
I can see that being a good trade. The downside skew in particular looks aggressive to me, so
okay, you
might want to do maybe a 2x1 perhaps, or even more than that perhaps. What you're looking, maybe 58.75, 58.80 on the put side.
Yeah, so
that's an 80-point S&P move. You're receiving almost 4.5 ticks.
Yeah, this is quite interesting trade actually. So we would pay 24 plus 25, so 49 ticks. And then we could sell 2 of these wings to receive 8. Yep. So that takes us down to 41.
Yep.
And then probably just sell 1 of the upside because I'm in trouble if it's going a lot higher.
Exactly, yeah.
So maybe 1 of the 60/20s. That takes us down to 38 points. Is there something there? 38 points for the straddle on non-farms. That seems legit.
Yeah, and certainly if we do get a number that comes in closer to those low and high estimates, I think we are going to get a decent shift. So as a vol buy and trade, I don't think that's bad value.
Yeah. Good. Elliot, thank you as always. Absolutely wonderful. We are coming up to Angeline and producer Phil are going to have a quick Q&A. So anybody who has any questions, whether it's on the platform or on Angeline's holidays, then please pop your questions into the chat. Elliot, big weekend plans?
A bit of a quiet one this weekend. It's my oldest son's 13th birthday, so I've got
go
a
on, give him a shout out.
On the way. Jacob, yeah. He's a little monkey, but hey ho. In fact, tonight we have a lads v dads match, so I might come in nursing an injury where a bunch of 12-year-olds have kicked lumps out of me.
Lads v dads when they're 12-year-old. That's an interesting one.
It will be, yeah.
I fancy you'll get 5 goals past them in the first 20 minutes, and then you're in trouble.
Put them in pieces, exactly. Yep.
Yeah. Good stuff.
It'll be good fun.
Right. Also, that's me for the week, people. So have a wonderful weekend, but more importantly, have a wonderful trading session on the S&P 500. We will try and get a video out. We're going to do a couple of videos on the Trump-Elon spat as well. So make sure you subscribe to our YouTube channel to pick those up later on.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back. And we have a special segment with our one and only producer Phil. Hello, good to get you away from the gallery and into the studio.
I know. I know what I prefer, but I thought I'd come have a chit chat. I've also missed you guys as well. I've been busy.
You have. You've been moonlighting.
I've been moonlighting. I don't mean to moonlight, but I'm a man of my word. So when I agree to something, I don't like saying no to it. So, but I am tired. I was pulling cables out at 9 o'clock last night. So yeah.
I missed you in my ear.
Yes.
Just,
and now we've got Rich and Aria. I'm not sure what's better or worse.
He was also trying to be director Rich as well earlier.
He was, yeah. I've had to ban him from touching cables.
Rich, give us a few highlights from the conference.
I mean, they talked a lot about AI, classically. There was also a lot of fintech stuff. So my day job is fintech, and then my side job was fintech. So I was exhausted by fintech at the end of it. But yeah, South by Southwest, it's an Austin, Texas festival that's coming in for the first time in Europe. So it was the inaugural one. It was a massive thing in Shoreditch. They had like 30 venues. It was bigger than I thought it was going to be. So I was just doing the cameras and the vision. I don't get to press buttons anymore. This is the problem with this job.
He likes pressing people's buttons.
I like pressing buttons. I'm an engineer by trade, so now it's a different side of things. But I enjoy it. You know, we're good. I'm glad to be back.
How many hours was it? A very long one, like.
Yeah, like 10, 12 hours sessions. Everyone just wants to talk about AI. And a lot of governance stuff as well, talking about kind of how to basically integrate these things into policies and governance and, you know, utilize them. However, there was some scary chats about AI replacing things rather than actually AI assisting us in our day-to-day life.
No.
So, and that was a good. It was a good event. You know, I enjoyed it. But I'm tired. I'm glad to be back.
I'm glad it's Friday too. But we have loads to get across, loads of questions from our trader friends, and we love it when you. It makes our job easier when you give us questions, because then we can be targeted.
I've got a few things I want to talk about now.
Yeah.
If you do have any questions about the show, about Angeline's holidays, about Richard's deodorant usage or his credit card limit for the event that we're going to go to, then get them in and we'll answer them. But there's a few things I wanted to discuss. Is Phil a Take That fan? I've actually got a really funny story about that.
Okay, I've got a funny story.
I've performed on stage with Take That.
Really?
That's not even a joke.
Wow.
Yeah. So I did 9 nights at the O2 Arena with them. I was a backing dancer. That's literally not a joke.
I love it.
People won't believe me, but
I want pictures on this, people.
I'll find some photos. Basically, I went to Ravensbourne University, which is right next to the O2 Arena, and they put out basically like, we need backing dancers. And I thought it was a rigging job. I thought it was experience. I thought I was doing that. And
you thought you were rigging in the background, not dancing.
Yeah, I thought I was. It was work experience.
Nice.
Turns out it was backing dancing.
Nice.
So 9 nights there, in front of 20,000 people.
Dare I ask, what were you wearing?
White shirt.
Okay.
Yeah. So that's
very Take That.
Very Take That. So I actually am a Take That fan, because I've technically seen them the most live, which is embarrassing. Anyways, back to a few things I want to discuss. Discord. Look.
People, producer Phil has been, I said, like Tough Mudder. He has been going through the Tough Mudder ever since.
I've done Tough Mudder twice.
Oh my goodness, Take That and Tough Mudder. I know it was you, Maturin, because we were on the show together, and it was Maturin who came up with the idea, and everyone chimed in as well. And I think, Maturin, you also came up with emails. I remember, I've got a good memory that you even said, you know, here's how you set it up. But Phil has been trying to get through hoops.
Yeah, I've got a deal.
Hoops. You've got a deal.
Well, the deal to the people.
Oh,
I've made my last plea, email, message to the powers that be. If it doesn't happen for whatever reason, then you have our blessing. I'm not going to take it personally. I'll sleep easy at night, and we'll just join you and help you out, and it'll be community-led, and that's fine. So that's the Discord. It's just kind of been a bit of a painful experience, but you know, we are at powers that be. You know, like you've got to work with people. Yeah. So we're trying our best, but of course, like, you know, we will give you our blessing. I want to talk about something exciting that was approved recently. That we're going to get some improvements to the show.
Yay!
We've got some budget.
Amazing.
And we're gonna try and improve things. So you will start to see different looks and feels of the show. That will mean that we'll probably go to some kind of like temporary studio for a little bit. We don't have a timeline on that realistically, but it does mean that you'll have a different show. It'll be a shorter show, and it might be a little bit less of our normal guests, but we'll keep you on air. We'll keep the moves coming.
Will Ange and Rich, who've got terrible eyesight, get bigger screens?
Potentially. I know the studio. It's you might need to work on your eyesight.
Okay.
So just drink loads of carrot juice from now between potentially happening in end of June, July. That's an arbitrary date at the moment. We're working on it.
Because just telling everyone, trader friends, how much we make these shows happen. Like, I ran out of one side of my contact lenses, so I've got 2 sides of the lower power on at the moment.
Yeah.
So thankfully, I've got 2 screens here, but like that screen over there is now starting to get blurry. But it would be great
What's wrong with you guys at IG and your eyesight?
because we look at so many charts. That's why we ask her, how many, this is a poll, all of you, how many of you have got perfect eyesight doing what you do? Just give us.
Demographic has perfect eyesight.
Oh, Andrew McKilvey, what a compliment, saying, Phil, the show is perfect.
Music.
Just the music that needs improving.
Music's a funny one because music's a copyright issue and music's a branding thing. So we're still working together with the branding team when it comes to basic music. So the music will probably change as well. I don't know when, but the music will change and we'll, you know, I'm a classic rock fan. I love Dire Straits. So the intro music, I feel was a little bit Dire Straitsy. So that was what I was going for. So the music will change. But it's more like working with what we've got. I also adopted the show from producer Fred.
Yes.
So I'm just kind of working with what I've got and also integrating more into the IG team.
And like Phil said, we also have to work with the licenses. We can't use just any music because then we'll have to...
If we could just use Dire Straits, we would. It would just be Dire Straits or Rush. It'd be one of the two.
Yeah, something upbeat, right?
Something upbeat.
Will we get air conditioning? Can I show them this? Can I show them this?
The fan, John Lewis fan.
Yes, so to prevent Ange and Rich from overheating, because we're surrounded by lights, we have this thing going on. So
It's quite nice though, with the breeze. I can see why Rich struggled.
Yeah, now that you're in with us, you know it's like a sauna.
The fan's nice, I must admit, although he's left his bloody banana here again. I'll keep...
Oh yeah.
Banned McDonald, banned.
Producer Fred banned bananas from the, and after he left, then Rich and I thought we can bring the bananas back in.
But now I'm back and...
No, I mean, Fred, not you. You don't have a problem with the smell.
No, I like bananas.
Yeah, I like bananas too.
My mum hates bananas. Doesn't like the smell.
What is this anti-banana stuff? I mean, what did a banana ever do to her?
I'm a big banana fan. I also wanted to congratulate you on your level 2 analysis. I'm not sure if anyone saw the name strap.
Oh, well remembered.
Official MSTA.
I am an official MSTA. I did.
What does that mean?
It means that I am a technician. Oh, thank you. I was so excited, but we had, launch of crypto coming up, and also that Milan trip that I didn't get to actually explain it to everyone properly. So thanks for remembering. It means I'm a technician now, a member of the STA. And as long as the company renews my membership, hint, hint. But it was a really difficult exam, the hardest exam I've ever done in my life, really. And I have done a master's as well. But it's the sheer length.
You know what you're talking about then, you're not
just winging it.
Yeah.
3.5 hours in total with 2 cameras, invigilators and everything. But everything is written. So there's no MCQ, there's no, I'm going to talk around, you literally type.
You can't just work it on ChatGPT like Poppy.
Like
I'm
Poppy.
not happy about this, by the way. I work very hard to guess the chart.
Yeah.
It's difficult. The chart's got to be known but not known. And then you're using ChatGPT.
Yeah, Poppy, we have an issue with that. But, don't be so harsh. Don't be so harsh.
We need this.
Poppy, I think you can be unbanned just for this one. But no ChatGPT. But yeah, I mean, it literally was a 3.5-hour exam, half an hour because you have to log in, make sure the cameras and everything are working. But it tells you everything from explaining the Kondratiev cycle to giving exit and entry points to understanding patterns, understanding candlesticks. And if you want to see a series that I've been developing, you can go. I'm going to whack up my chart here. F9, F11. You can't say that because you're in here with me. But yeah, I'm just going to show you the shorts here. And when you go down here, you can see technical tips, right? There are 4 so far. There's me looking quite scary with a hammer because I'm explaining.
This is just self-publicity. You're a narcissist, and
showing you where it lives because a lot of people don't know. And you can also find our pre-market, which producer Phil kindly records for us.
I do, yes.
And posts it. And I'm also going to get a microphone and a proper camera soon. And
have you heard of Amazon next day delivery?
Yes, I then had to go to Milan.
Yes.
Speaking of Milan, I have a lot of stories for you when these guys got me to do a live hit from Milan.
Well, I was forced into it when I was in Menorca, so it was more like, this isn't fair, this is my week off.
It's payback
anyone that takes a week off, we're basically dragging back onto the show. So
payback time. So that live hit, Trader Friends, when you saw it, everyone's like so impressed. Wow, she's managed to even find an Italian flag behind her.
It's my favourite country. So I proposed to my wife.
Oh, wow.
Italy.
Wow. The food is good. I cannot knock their food. Coca-Cola, 1 can, €6. But I'll forgive them because...
Espresso, €1.
Yeah, so that all's forgiven, all's forgiven.
Exactly.
But that flag took me 30 minutes because the first stand-up location that I had, I prepped it, Wi-Fi's good, everything's fine, was in front of the poolside. And then what happened? They bumped up the Italian pop music.
Italian pop music?
Yeah, it was like espresso macchiato, you know, that Eurovision vibe. Yeah, it was just like, I cannot hear myself think.
That sounds awful.
I found another place by the side of the street with a nice background of the city. And what happens right before I hit? Garbage truck. Beep, beep, beep. And I was just...
Welcome back to reality.
So yeah, it was the third location where I found the flag and I found everything which was the front of the hotel. Thank you, Per Somali. It sounds like you understand.
Yeah.
Broadcast.
Congratulations, Dan. We're all very proud of you. Very happy for you as well. When's level 3 then?
There's no level 3.
There's no level 3.
2 is the top. That's
2 is the top.
Done.
That's it.
Kirky, send me an email. I will send across the details to you.
Did IG ever finish the opinions trading course with Rich? I believe that's already up. That's on the YouTube.
Yeah, I think so.
Yeah.
It's on the same page again. I'm going to show it to you. And if you look at the same shorts page.
Don't bring the show back up on air, guys.
And under, yeah. Videos, you can see all of the different videos that we've compiled there for you. And under playlists to your right, click on playlists and you'll see the playlists that we have to the right. It says Beginner's Guide to Options. You have technical tips for the full playlist, and I guarantee you it's very short. If my 9-year-old can understand the concept I am explaining, everyone can. I've made it super simple. And we've got the trading experiences and decoding crypto series that we've started here as well.
There we go. And yeah, the options course, beginner's guide, back soon. So yeah, we'll just kind of allowing video flow, so we're not overloading you with content. So that's part of that. So yeah, date first in the description. It kind of messes up what people are searching. That's the problem. So I don't like saying no to people, but
I know.
we can't accommodate for that, I'm sorry.
We're yes people here. We're yes
we are
people.
Yes people, and I do like to be flexible, but it would just kind of mess up a few things that we kind of try and help with background. So sorry, R6 Senna, but we can't facilitate that. Someone asked about Rheinmetall earlier.
Yes.
That we've not gotten to. I think that was...
Who was it? Before we get to that, I just saw another message asking where can we find more on the course. If you whack up my site very quickly, this is the page for the Society of Technical Analysts, and here you can find.
Are you gonna hit full screen? So there's a problem that I have. I constantly berate her in her ear.
Yes.
To hit full screen. And she doesn't listen to me.
I do listen. It's just that I'm sometimes so busy on the other screen, it goes, off to full screens, another screen that I don't want, and then it ruins.
It's just gone on my list.
All of my platforms, all of my data. I have it in specific places so that my challenged eyesight can find it easily.
Back to the STA. So if people wanted to actually do that course and sign up for it, what do they have to do?
So what they have to do is go to the page and they go under Education, which is the top menu bar there. You can look at the home study course. That's the one I did, and I did that purely because.
So do you have to be? Sorry, you said you have to be a member to do it.
Well, you first have to apply for a membership, which is not the same as a member. You have to pass
it's not like joining Netflix.
No, you have to pass 2 levels.
Sure.
Level 1, level 2, which I have before getting that. But you need to have paid, I think it's like £80 before you can pay for the actual course itself. And there are 2 levels, yeah. One of those, yeah. And you can see here on the home study course, A home study course, it takes you through, you know, what you have to do. It's quite detailed, I have to say. Who should study, course objective, syllabus, and facts.
1,400 quid?
Yeah.
Bloody hell.
It's a lot. And it tells you about the objective, right? There are some self-tests that you can do. The first level is multiple choice, but it's written in a very, very clever way in that you could easily get it wrong. Yeah.
Okay. So yeah, it's not.
It's not obvious.
It's not GCSE fluke it type of exam.
No, you can't cut trader friends. You can't cut an eraser into a cube and put A, B, C, D. Yeah.
Yeah. I think for that cost, I'd want something that's a good exam.
Yeah.
Did the exam cover hemline index, whatever that is?
Hemline index.
It was one of Kondratiev's ideas. This is from Arthur Fox Haig.
Thank you, Arthur Fox Haig. I think it did briefly, but to be honest, I had so much in my head, and I knew that the tricky bit wasn't the writing, it was actually the charting. That I spent a huge amount of time just, you have to, I bought an extra mouse, I bought an extra cordless mouse.
You bought an extra mouse, but the mouse you use still clicks a lot. Where's our silent mouse?
Yeah, where is our silent mouse?
Okay.
I'm looking at the studio, but you're here with me. Where is the one that IG has given to me is very, very noisy.
Right, we'll go sort that out later.
Very noisy.
We'll also try and get.
Has retracted lots of messages. Why is that?
We'll also try and get to a new bell. I can hear Esar in my ear, and I know Esar loves coming on the show. So yeah.
Yeah.
Thank you.
Yeah, very quickly about the bell. We will have an update on that, won't we, Phil?
The bell's not bad. My problem is people don't ring the bell properly.
I ring it properly. By the way, what happened to the bell whilst I was in Milan? Because the sellotape in here.
That's been like that for 6 months. You've just not paid attention.
No, there was something in here. I swear to God, there was like a little.
No, I took that out.
Why?
Because we have to fluke it because of the way sound works.
Oh.
That's a door mount, and yet people bang it like that. Just. We do fluke the sound. I'm sorry. I've announced the falsity of TV, but that's TV. Right. Anyways, I've had enough of this. It's getting a bit hot, and I'm in a corduroy shirt.
It's getting a bit hot. You've only been here.
Yeah,
for a few minutes.
I'm in a.
Poor Rich and I are in here like
I just
hours
do this to have a bit of fun.
On end.
Yeah, that's your job.
Yeah, Shrimp, Fred. And we've told you about where to find the options course, where it's handily collated. Phil Arsang saying, please, can you put date first in description of the YouTube sessions?
We already answered that.
Yeah.
Right, time to go. We're 2 subscribers off 900. Please make our day.
2 more subscribers.
If we can get to 900 subscribers before the end of the show. If you are out there watching and you're not subscribed and you're just freeloading our content of all the effort that we make, then please do subscribe.
Don't freeload.
Don't be a freeloader. Please subscribe.
We work very hard here in the heat.
And yeah, we'll bring you back more. We'll have some more updates. I'll come back again soon. Thanks, Adrianj.
Yeah.
I'll see you guys soon. Have a nice weekend as well.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back. It's Issa here to take us through the key tradable risk events in the coming week.
It's funny, like this time last week, we said that it was going to be quite a quiet week, low event, but at the same time, often people say sell in May, go away. And that was kind of your last chance to sell in May. And actually, this week has been chaos. Like, were you following all the Twitter drama last night?
Oh my goodness.
It was mad.
Rich and I did a Trump, I was Musk, he was Trump.
Oh, you did the right role play? That's
the role play thing, which our viewers also chimed in as well. It is like something to behold.
Yeah, it's mad.
Especially like, you know, in a public sphere, in a time when, you know, you never expect this from...
Yeah. But I was like literally on my phone and I was like, what is going on? And then you just get notification after notification. It was crazy.
Yeah.
So I think this week is a week where I'm sure that drama will continue. And I know there's a call today between Elon and Trump. There might be a sort of reconciliation call, but let's see. But actually the coming week actually does have a bunch of data for the US and a couple of earnings. So I thought we would maybe talk about those. We're largely past earnings season, but there are one or two names that maybe we'll talk about. So I don't know, Phil has very kindly put together a slide for us.
A slide? That is my... here we are.
There you go. So right, so for the US, I think let's start with the US. We have non-farm payroll today.
It's the elephant in the room.
Yeah, so we'll see what the job numbers look like. We've had kind of mixed signals on jobs.
We have. And also the recent data out of the US, you know, has been weak.
What do you think of the current, because we had JOLTS data that was suggesting actually pretty strong job openings, but then we had like other labor market data that was suggesting quite weak payroll data. And so I think it's a bit of a mixed picture, and I think seeing where NFP lands today will be quite an interesting data point.
Yeah, and what it means for the Fed, right? I mean, is it going to a weaker than expected number? Is that going to reinforce expectations of this Fed rate cut to come?
And I think likewise with the CPI data we're getting next week, right? Like looking at what that data will be will kind of start to guide the direction of what the Fed can do, because we've had several cool prints in a row. I think the coming data next week is a very kind of mixed bag, because like May has been a really mixed month. You had some of the front running of the tariffs, and then the tariffs kind of got undone, and so it's all been a bit back and forth. And I think we'll actually probably have to wait one more month
before we get clarity,
before we get real clean data. But I think either way, next week's CPI data will be kind of clarifying for what the Fed will have to do.
What I find really super interesting about the recent data that we've had out, yes, it's been mixed. Yes, you know, we've had, you know, up arrow, down arrow, and that ADP number as well. And that
the equity markets don't seem to care, right?
They
just seem to truck along.
Yeah, chugging along like a, you know, freight train with a lot of momentum. And we even talked about this earlier on in the week. You know, can Trump continue to do what he's doing? Even with yields on the longer end being high, can he continue to do it because markets are holding up, right? Markets are holding up.
But it's almost like a kind of weird negative reinforcement, which is like, if the markets are holding up, then he can do anything, right?
I can do anything.
Do you want to pull up the Fed Watch tool just to see? Because I think this is one of those things where, like, jobs data, inflation data, if the world was still a very Fed-led world, we would be seeing the Fed movements really start to...
You want to compare?
Let's compare, and then maybe let's go out to like September or October. I think that's where the
that's when it gets interesting for the labor market. I think that's when we start, you know, seeing real pain coming through.
Yeah, so
look at that.
Look at that. There's just like no certainty at all.
Yeah.
That's crazy to me. Like it could basically be as low as like 275 basis points versus 400 basis points. It's crazy.
Yeah. And you're right. I think we are going to. This is not going to be a very clean month.
Yeah.
And then we start seeing clarity.
Where do you think this will start to like land eventually? Maybe even if we go to maybe the July date. I think the July date is an interesting one.
Yeah.
Because I think you're in September 26. So if we go to September 25, that's yeah, exactly. You can see this is like a couple of months from now.
Yeah.
It's not that many meetings away, right? It's 3 meetings away.
And this
look
is July.
Yeah, look how much.
versus
Look at the
September.
light blue bars versus these dark blue bars. We're seeing like quite drastic moves.
Yeah.
And I think it's just because there is quite a lot of uncertainty. And I think if you look at the bond yields on like say 30-year US government bonds, we're seeing quite a lot of bear steepening kind of sentiment, right?
Yeah,
So
let's see where they are now, because I had it set up earlier before you came in.
yeah.
Last I checked, it was starting to creep up again.
I mean, we were at 5% on the 20-year and 30-year, which I think is like really highlighting the fact that the bond market is in a position where one of 3 things is true. Either, number one, they're concerned about the debt.
Yeah.
And especially with the bill, the big beautiful bill that's going through, like that is driving a lot of concern.
There you go.
I think
Highlight it for you guys in case you.
look at that, yeah. Or they're concerned about persistent growth in inflation, which is actually a very different story. Like, do we think inflation is just going to be around for longer? Maybe the tariffs will contribute to that. That would also push up bond yields. Or it's a mix of both of those things, and maybe with a sprinkling of the fact that the US government risk premium is a bit higher than it has been historically. But like, that's crazy. What is it, 4.9, 4.87? Yeah, 4.87 on the 20-year. And that's down like 20 basis points. So it's just, I really do think, 2 basis points, but still. But I do think we're in a position where the bond market, like the so-called bond vigilantes are going to start to come out to play, because it's looking not great.
It's not. But yet again, you know, Trump's managed to, for some reason, keep markets, you know, on side somehow. And
And it's like, and as these bond yields have been going up, you haven't seen the markets respond at all.
Yeah.
And so I guess no one really cares what the Fed's doing, kind of, at least for now.
That's the suggestion, right?
Yeah. Which is interesting. And I think I think it'll be an interesting one to see, especially next week. Once we've had jobs data, we've had the CPI data, does that shift or does it stay kind of broadly the same?
Yeah.
So, okay, that's the US.
Yeah.
We also have some earnings for the US.
Yeah, so we have Oracle, right? Let's whack up that chart again.
Yeah, so if
Producer
we pull
Phil.
up the slide, the 2 that I have flagged, it's a relatively quiet week for earnings. There are some earnings in Europe, but really the big ones are in the US, which is Oracle and Adobe. And I think the reason I pulled these up together and I thought they were interesting is that these are 2 sides of the AI kind of debate, where you've got Oracle doing a lot of the infrastructure providing, and Adobe one of the application layer services that provides image-related kind of Adobe services.
Yeah, so let's just want to celebrate one thing whilst you've been talking. Clearly it was because of Issa. We have just hit 900 subscribers.
Hey, that's me.
Thanks to Arthur Fox Haig as well for saying, come on out, you lurkers. Subscribe. Can't you see these guys are working under conditions that, you know, require new studio, new bell, we're just showing them the fan.
The bell is very funny. It's been in kind of a state which is becoming more and more tape as the show goes on.
More gaffer.
Yeah, exactly.
More gaffer. Oracle is out Wednesday. Just a reminder to you trader friends, after the market close, this is some quarterly results there. And Adobe scheduled out after the close on Thursday.
Yeah, it's a late one in the week.
Well, Adobe's guidance is going to be interesting because, you know, the previous earnings, it said that it's got clarity now over, remember the scandal over how it's going to license its product when it's binding so many other images and resources, right? And whether it had the rights to in the first place.
And I think it's, by the way, that IP issue is an issue plaguing a lot of AI providers.
Yeah.
I think like you've got the New York Times suing OpenAI and a whole bunch of other lawsuits. I think one of the things that is really interesting for me with Adobe is looking at how they will think about existing in a world where companies like Meta are going to try and provide end-to-end services for people who want to do marketing, for example, where they will be generating the content themselves and the creative themselves to then run on their own platforms.
That's right.
And actually, that puts a lot of pressure on Adobe. And so I don't know if you've seen any of the push recently, but Adobe has been doing a lot of push for Adobe Express, which is this mobile app they have that can be used by consumers and retail to kind of play around with images. And I think that's an acknowledgement there that some of the demand from like existing marketing providers might not be quite as strong in the future, and so then they have to do a bit of a pivot to these kind of consumer and retail users.
Right. And that is, you know, something that we're already seeing play out even on our own WhatsApp or apps in terms of...
You're seeing AI everywhere, right?
Yeah, and I'm sure at some point, once they see what we're using the most of, we'll suddenly get a subscribe for $2.99 per month, right? Here's how to collate your pictures beautifully, all done for you by the album.
And Adobe's quite famous for this kind of like semi-freemium model where they try and do very, very basic and, if anything, quite difficult to use versions of their product, and then they stick all the good features behind a kind of paywall or a subscription. I was someone who a long time ago used to be a big user of Photoshop, and then the annual licenses were just brutal.
Yeah, it's crazy.
Yeah, really crazy. Right, so we'll see those two earnings. And then the final thing to flag is we have a couple of countries sharing GDP data next week.
Yeah, UK being one of them, right?
Yes, so UK and Japan. And I think in these instances, that is just more information to think about when we come to central bank decisions and exchange rate stuff. So I know in Japan in particular, we're going to get, technically I think we're going to get the data this week on Sunday night while we're all in bed.
Yeah.
But I think the market...
early Monday morning.
Yeah, exactly. The market will be reacting to it on Monday morning. The UK GDP data coming out later in the week. It'll be useful and interesting to think about how central banks will respond. We've seen the ECB continue to kind of cut rates. The UK's been a bit hesitant. And so I guess we'll see what the GDP numbers look like. Japan has been caught in a lot of the carry trade dilemma, where you've seen demand for Japanese government bonds be very limited to a point where the central bank has had to step in. I think seeing what the GDP data will look like, I think will really inform what those bond yields in Japan will do.
Yeah, totally. I'm really interested to find out how the data plays out in terms of domestic demand, which has been strong, right, in Japan, versus the whole tariff uncertainty, you know, external demand weakness, and how that plays out with, as we all know, we've had several IG members come back from Japan recently. Aren't you meant to be going as well?
No, my partner and I want to go to Japan.
It is like heaving. Everyone I've spoken to.
I feel like flight tickets are so expensive because the exchange rate is cheap, and so people want to get there and enjoy living the good life.
Yeah, and Japan is like tourist destination 2025, you know. My brother said that you can't actually take a photo without anyone in shot.
Oh, really? Well, now you have AI features.
Get rid of it. Yeah, but they'll leave a leg or something.
Yeah.
GDP. I watched a panorama piece, and if you, you need a strong glass in hand.
Oh, really?
But it's really cool. It explains how, you know, our debt burden for the UK.
Oh, God.
This is good for those of us that watch, you know, the bond markets. We talk about the bond vigilantes here. Yeah. How in the 40s, you know, it was only like, you know, 40% of GDP, and then
we're now well over 100, right?
Yeah, and it's like 80, and then post-COVID went up even more, and then after the whole trust thing, it went up even more, and now, yes, you're right, we're close to.
And it's not quite as bad as the US, right? Where you're seeing more being spent on interest payments than on defense. And it's not like the US doesn't spend a lot on defense, right? Yeah. And so I think
what's interesting too is the debt repayments.
Yeah.
Dwarf. I mean, it's just so huge compared to what we spend on defense.
Well, of course, right? And I think as we go into next week, we've highlighted what are some of those concrete data points and those concrete like earnings moments that you might want to look for. I think the elephant in the room is the fact that there's a whole bunch of things that will change markets that weren't on that slide, and those include things like what happens to the big beautiful bill in Congress, what happens to the Trump-Elon situation, do they cut any trade deals? Because we're now like a month away from the end of this pause.
The 90-day.
Yeah, exactly right. This original 90-day pause. Is there going to be any news on that? Is it going to be extended at all? We saw that the US actually sent a letter out to countries basically saying, if you want a deal, I would start getting on it pretty quickly. And I can't tell if that is a clear threat or if that just feels super weak from them because they're not getting the demand that I think they thought they would in terms of trade deals. And so I think a lot of the noise and news will be stuff that isn't forecastable or planned. And so I think this is just one of those environments where you just have to kind of annoyingly stay a little bit loose and up to date with information as it comes in and try to respond in a kind of a live way.
And on that note, because we have a few minutes left, I know that SR is going to be on a beach holiday quite soon. And as you've seen recently...
Start of July, so I've still got a couple of weeks.
Oh, well, you know, we here at Trade Live with IG want to always, you know, be attuned.
Correspondence on the ground.
Yeah, we're spreading globally, right?
Yeah. So wait, when you were in when you were in Milan, did you feel like you were seeing stuff that you just wouldn't have been able to see while in the UK? Were there any like kind of data points that really like resonated? I know you've spoken about Coke prices.
I did. I spoke of Coke prices.
Yeah.
Martin, and you asked me about inflation.
Yeah.
Certainly, yes, Milan is a you know, tourist hotspot, and yes, it was, you know, during the summer season, but it does feel like inflation.
It felt extreme.
Yeah.
And like the ECB's cutting.
I know, right?
It's just kind of nuts, right?
Yeah. And
so do you think they're making a mistake cutting?
Possibly, because, you know, it's not as if people, you know, I like, when I travel, I like going to real Milan too. I don't just stay in the...
Like tourist spots. Yeah.
I'm that person that, you know, when I go to Amman, I don't want to just go to Amman. I actually go to, I got someone to take me to a Syrian refugee camp. I want to see it with my own eyes.
Yeah.
Right? We were escorted, everything was super safe, right? And I have friends there. So I didn't like take crazy risks, but I wanted to see for myself.
Sure, yeah.
And just, you know, looking at the local people with the prices on local mercados.
Really?
We're not talking like Carrefour Express, right? We're talking about that
yeah.
little shop that sells fruit, whatever. They're still selling, you know, a punnet of grapes for €7.99.
No.
That is not cheap. That is not cheap to anyone. I mean,
what was the like sentiment like? Did people feel like, was there optimism? Did it feel vibey, or was it kind of a bit, everyone was a bit on edge? Or
if you're kind of not in the tourist hotspot, then people aren't really, you know, you don't feel that optimism kind of coming through. I was surprised though. I always look out for these two things as an indication.
Yeah. What are your soft indicators?
Soft indicators. Chinese tourists.
Okay. Yeah.
There weren't that many.
Okay. Well, that tells you a lot about China GDP data. Probably. Yeah.
There weren't that many. In a place, in a country that is absolutely throwing their arms wide open, right?
Yeah.
They had banners, and even my kids like, why is there always every Prada, every Gucci, every Fendi, why is there always a woman that looks like you on the advert?
Yeah.
Because we buy 1 in 4, not myself, but you know, the Chinese buy. Is it like 1 in 4?
1 in 4 luxury bags or something. Yeah.
Something crazy like that. Every university advert that I saw, come study in Italy, had a Chinese looking person.
Wow. So okay, that's signal one. What's the final?
The second signal is the number of Saudis, Emiratis were not there. They were just not there. In their summer months, they escape the heat and they come to here or to Europe.
Interesting. So it's almost like you're getting more signals about global GDP than you are about maybe it's
the local. Yeah.
Interesting. Cool. On that note,
we're going to get you to call in when you're by the beach.
When I'm in my on the beach.
Yeah, on the beach.
Yeah.
Have a great weekend, guys. We will see you bright and early on Monday. So if you're from Germany or France and you're on holiday, still tune in because we are still where the big markets are. We are still live on that day. Any questions, send them across. And thank you for getting us to 900.
Yes. Have a great weekend, everyone.
Well. Welcome back. This is Overtime. I'm Amelia Spivak in San Francisco. That's Dylan Radigan in Milan. Thomas Westwater sitting in for Chris from Chicago. Gentlemen, nothing's going on, so let's just have a quaint little conversation about what the ECB did last night, the jobs day that's coming up tomorrow. It's a quiet day in the markets here. Oh, wait, maybe not. Dylan, I'll go to you first. Obviously, we have to have a conversation here about what has just transpired in the last moments of the trading day. And we'll go to a chart of Tesla to give us some appropriate backdrop, just as soon as it loads here, for what we're about to discuss. Here we go. That's a fun little end of day right here. So, just by way of background,
just for those who might be catching up.
Yes. Just by way of background here.
Let me just read the pinned tweet at the top of Elon Musk's Twitter feed, which I think he's.
If you would please.
220 million followers, anyway.
Yes.
So 2 hours ago, Mr. Musk posted a pinned tweet at the top of his Twitter feed titled, "Is it time to create a new political party in America that actually represents the 80% in the middle? Yes or no?" So the headline, I would say, is Elon Musk has set out to create a new political party in America as of 2 hours ago, first of all.
Yeah.
Prior to that, Elon Musk said, time to drop the really big bomb. This is all on his Twitter feed. Donald Trump is in the Epstein files. That's the real reason they have not been made public. Have a nice day, DJT.
Spicy.
Something that gets said. Congress is spending America into bankruptcy. Not even those in Congress who had to vote on the big, ugly spending bill had time to read it. When I find another, there's some really good ones in here. I'm sorry for kill the bill. Anyway, so Elon Musk is an open Twitter war with the president of the United States, up to and including an activation to create a new political party that is neither Democrat or Republican, up to and including direct accusations that Donald Trump is associated with the most famous and horrifying pedophile ring in the history of America. And on the other side of the ledger, the president of the United States, a sophisticated and elegant and powerful man, is also on his Twitter feed, or whatever his feed is. He has his platform, I suppose.
He's on Truth Social, but before you say that this next thing, I was just reloading his Truth Social page, and it appears to have gone down.
Okay.
Too many people trying to read.
And so, yeah. Trump basically, if I can find, I'm just looking at Twitter. I don't have a Truth Social feed.
I have.
So why don't you go ahead?
I have Truth Social in front of me here. So I'll read. If you see me looking down, this is me looking on my phone because I pulled this up moments ago before the page went down, and I haven't refreshed, so I can still see it. I'll read directly from the President of the United States. Elon was, quote, wearing thin. I asked him to leave. I took away his EV mandate that forced everyone to buy electric cars, capitalized, that nobody else wanted, that he knew for months I was going to do, and he went, all caps, crazy. Next, proposed the easiest way to save billions in our budget, billions and billions of dollars, all capitalized, is to terminate Elon's government subsidies and contracts. I was always surprised that Biden didn't do it.
The point, that's the readout. So the point is sort of beyond anybody's wildest dreams and or nightmares. Mm-hmm. The world's richest man who owns one of the most widely read media channels on earth, which is X or Twitter, is in an open, insult-laden, like a 7th grade, Ilya is a loser. Ilya's beard is stupid. And you're like, no, Italy is stupid. Dylan's haircut is too short and he drinks too much espresso. Like, we're at the most idiotic level of interaction between what should be the two most sophisticated, competent individuals on earth. One, the world's richest man, the other, the president of the United States. They both collapse. Oh, the other key thing that's missing, I think that I'll paraphrase it, was a Musk comment, which was, if it wasn't for me, Donald Trump would never be the president of the United States. The only reason Donald Trump is the president of the United States is because of everything that I did, blah, 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 blah. Yeah. Anyway, so there's multiple pieces here. I think, one, there's this sort of titillation and entertainment of the absurdity of this, which is obviously something we're all going to both be horrified by and enjoy, like any like the world's best ever reality television show. Yes. Like bickering bitches, basically. Okay. So we have two bickering bitches, but instead of being the Real Housewives of whatever, it's the president and the world's richest man. On the other hand, because it's the president and the world's richest man, and because the world's richest man not only has Twitter, he has the most significant and important electric vehicle company on earth. Whatever you think about Tesla, he has the most significant and important space exploration company on earth. And there's
Starlink,
hundreds and
a huge piece of
the most advanced defense contractor and communications platform on Earth. So defense contractor, communication, space exploration, and EVs, and President of the United States. Fine.
Yeah.
Let's set aside the reality television show.
Sure.
This is a financial discussion at its heart. It's a financial network at its core.
Yes.
The chart tells a story. Tesla's down 14% today.
Yeah.
Trump, I think, actually came out point blank and said, I'm going to F all of Elon's contracts.
He did.
The way that
he did.
What did he say? Do you know what he said?
So directly, his Truth Social page is back up. The quote I just read was, the easiest way to save millions in our budget, billions and billions of dollars, is to terminate Elon's government subsidies and contracts. I was surprised that Biden didn't do it. The next post here, 7 minutes ago, I don't mind Elon turning against me, but he should have done so months ago. This is one of the greatest bills ever presented to Congress. So the president has gone back to pushing his bill, but he very clearly, just an hour ago, threatens to cut off the Musk universe of companies from government dollars.
So this isn't just a reality show, it's a reality show being played with the world's most powerful economy. Anyway, with all the superlatives, you could reasonably assert, outside of maybe the president of China, outside of maybe the president of Russia, the two most powerful individuals on earth.
Yes.
Now in a 7th grade social media war, that is, what is the enterprise value of Tesla? Hundreds of billions of dollars, yes?
Sure.
So the enterprise, what's 14% of Tesla? I don't know, it's got to be
a bunch of money.
A huge amount of money. So this makes me think. So much earlier in my career, I was assigned at Bloomberg for 7 consecutive years as a reporter to be the reporter covering what is called the World Economic Forum, which is an annual event in January. Many people know about it. In Switzerland, where there would be a big discussion and a meeting of many prime ministers, many presidents, many CEOs, important people.
The shorthand that people talk about that you may have heard is Davos this and Davos that.
Right.
This is that thing.
And so I was a member of that, a journalist covering that, a panelist in that, part of that for 7 years. And the thing, and I was a young person. I started there probably for the first time when I was maybe 29 and went through, I was in my mid to 36 or something. And the thing that really struck me, whether it was interacting with Tony Blair or Bill Clinton or Jamie Dimon for the first time when he was coming up at Smith Barney and all this, or other bank CEOs or other political leaders, heads of state, was how remarkably pedestrian, normal, and petty they were. And so I, as a younger person, really wanted to believe that people that were at the apex of power held themselves to a higher standard of elegance and grace, but that they thought about decision making in a way that transcended themselves. That I wouldn't make that just because if I'm the Prime Minister of England and Ilya or Thomas are the Prime Minister of France or the Chancellor of Germany, that I'm going to try to make decisions in the interest of England or in the interest of France. I'm not going to try to make decisions just because I think Ilya is funny looking or because I think Thomas was mean to my son. But when I was in those rooms in Davos, it became shockingly apparent to me how gigantic decisions that affected many, entire nations, tax policies, et cetera, were actually being made on the regular for the most. I think Sean Penn said it really well recently, just in the past couple of days when they were talking about renaming the boats and whatever the Navy. And he said that it's amazing to watch the Secretary of Defense go from being the most powerful man in the military to the chief petty officer. And to see
well done
how petty the decision-making was in the rooms in Davos and the impulses were, or to see how petty Donald Trump is, where he's wielding policy on the future of electric vehicles or on the future of space travel or on the future of cutting-edge communications, or for that matter, how petty Elon Musk is, that he's willing to try to publicly humiliate and degrade and be hostile to. Elon Musk, 2 hours ago, set out to create a new political party in the United States. Full stop. Okay, open war with both political parties, which I, by the way, agree with. This is terrible for the world, and this is terrible for the U.S. market. Not because of any one thing that President Trump or Mr. Musk may or may not do, but rather because, and I think Tom really made this very clear on Truth or Skepticism yesterday, it pulls back the curtain on how tiny and how petty and how shitty the quality of the decision making is for things that are immensely consequential for the future of humanity. Not just for the future of America, but for the well-being of all Earthlings. And that the people that are elevated, whether we elevated them or they were elevated by virtue of corruption and conniving, but that elevation is not appreciated or respected by those who hold it, which is something that I've argued ever since I left mainstream cable news in 2012. One of the reasons I left is I've realized that, in my opinion, this whole thing is an unserious, insulting joke and it's a degradation of me as a human being for me to spend my time every day talking about these idiots as if what they were doing was well-intended or meaningful, because it's not. And sure, it's, you know what, I would buy Tesla on the dip, by the way. I would rather buy Tesla and short the whole market. I think this is terrible for the overall market situation, because I think it really degrades the perception or quality of all of American leadership and industry across the board. And at the same time, probably creates an opportunity for Tesla. Just on price extreme, because I think Tesla's going to get face pounded, because I think it'll go down probably again tomorrow, because a lot of people probably still don't even like most people are still not tracking on Twitter or they're going to need to see the papers tomorrow and the morning television tomorrow and whatever. It's going to take 24 hours for what's happened in the last few hours to really spider into the entire sort of information system of the world. And what we're witnessing, despite the sort of minor titillation and entertainment that I might feel or anybody might feel in watching this, is an American tragedy. You're watching the objective, catastrophic failure of duty to be a rational custodian of power. I mean, I think about how other executives, Tom Sosnoff, I myself am a CEO of multiple relatively small companies. I know many people that are responsible for larger organizations, and the degree to which every day when I make decisions, I'm trying to make decisions in what I think is in the best interests of the company and the best interests of the people that work at the company. How do I create opportunities for them? How do I help them contribute the most? Trying to think outside of my own personal self-interest on a day-to-day basis, and what is in the interest of the organization, the people in the organization. Or you can see that up the ladder. I've worked with Tom Sosnoff for more than a decade, as I just use him because I still work with him, and the degree to which Tom makes decisions in an interest in creating an environment, a culture, a system, the resources that may or may not be in the short term in Tom's best interest, but they're in the best interest of the organization over time, and Tom believes his best interest is served by having a healthy organization over time. And so to reach this level of power, President of the United States, world's richest man, or richest person, and to abandon any sense of responsibility for the best interest of the organization, whether the organization is the United States of America or whether the organization is Tesla, SpaceX, Twitter, whatever, is a tragedy. My only hope is that Tom, and he was really hopeful for this yesterday, I'm more skeptical. Tom's hope was that by exposing how horrendous these two people are, and this relationship between money and politics is sort of the consummation of something that's been developing for decades, this relationship between money and politics, that by exposing it at its absolute worst and most absurd, that it is the first real opportunity for meaningful reform to get money out of politics, maybe ever. Because with money in politics, you're doomed to have a character like Mr. Trump and a character like Mr. Musk both acquire power, which they, obviously are not qualified to have, and also now that by virtue of their lack of qualification to have the power, now we're going to have to watch them over the next few years degrade the United States, degrade themselves, degrade the US dollar, and degrade really beautiful companies. I mean, think about how smart and how beautiful and how amazing the Tesla employees are.
I know some of them personally.
Or the
living in the Bay Area, I grew up with some of them. They're amazing people.
I've built businesses based on recruiting people who used to work at Tesla because Tesla was such a good magnet for talent that if you were good enough to work at Tesla, I literally set entire recruiting strategies for businesses based on find former Tesla engineers and hire them. And there are countless businesses, by the way, that are built to this day based on recruiting from these organizations, because these organizations have been the most elite magnets for the brightest minds in engineering for decades. And they are the ones that are getting punished for the idiocy of all this. Now, the silver lining, one might argue, is, okay, Trump is out from under the influence of Musk. Musk is a drug-addled freak show. Now Trump can do whatever he wants to do. One interpretation, a bunch of people have that. Other people say, well, no, Elon is going to finally break the two-party duopoly and create a viable third party in the United States, and then ultimately run a candidate based on that third party. So, I mean, there's an opportunity here to sort of look for silver linings in this. I would say that, the idea that Trump's going to get better is a far bridge to cross in terms of a silver lining. And it's probably not that much more rational to think that Elon Musk is going to be the right person to ultimately originate a meaningful third party. Although I think Musk has a better chance of creating a meaningful third party than Trump has of becoming some sort of super reliable, glorious president. But I think it's terrible for the US dollar. I think it's terrible for the short-term US markets. But I do think it's a buying opportunity for the Musk empire, specifically Tesla.
Thomas, I'm going to go to you in just a second. I just want to add two quick kind of historical asides here to put all of that in context. I think we need to definitely look at exactly the insights that Dylan has shared with us here. In particular, that the key takeaway for me here is that, as we've just learned from the back rooms of Davos, these people were always these people, but now we get to see them in plain sight.
Now you don't have to go to Davos to see that this is a clown show.
Yeah, and so if ever you were wondering if your leaders are human, they are indeed. And this is very dramatic kind of expose on that. So how much this is going to alter actual decision making, we'll see, because obviously they were always going to do what they were going to do. It's just now they're showing us that with no filter. And there is meaningful historical precedent. We've been here before. So FDR and the New Deal contingent fought with JP Morgan, who was, as a company and as a person, and as two people, really, the elder and the son, the kind of people that Elon Musk is now, sort of in the absence of a Fed, the people who you call to fix financial crises and things like this. So we've seen this before. We've also seen a schism on the right in the United States before, and that's really how you get the Republican Party becoming created. The right wing of its day, the Whig Party, splintered into a kind of nationalist, populist American party, then called, perhaps with some pejorative connotation, the Know-Nothings, and they went off and vanished over time. And of course, the right-wing opposition that splintered from them out of the Whig Party became the Abraham Lincoln Republicans that we know now. Sort of that was the genesis of the party as we know it here. So we've seen this movie. This has happened before. So it's not clear to me that Elon Musk is going to start a completely third party, but that there is a schism on the right, and where one half is kind of this nationalist populist thing and the other side is not that. This has happened before. A new party has emerged out of such a schism, and that new party went on to be a party for a long time. So with that historical context, Thomas, are you a buyer of Tesla here, and what are your thoughts?
Yeah, I already bought some. I had to. Yeah.
So you want to wait a day, Thomas? I mean, most people still don't even know this has happened.
Yeah, I'm afraid to miss out.
My only question is your timing. Are you figuring you buy some now, buy some more tomorrow kind of thing?
I might do that. So I gave myself some room. I sold a put spread at 245, 250. So I have a little bit of room here. I expect it the same way you said. I expect it to go down a little bit more tomorrow. I don't think it's going to be, the 15, the 14 and some change we had
this
today.
Is the 80% of it, and then it's just got to sort of trickle through the whole retail space for a day.
Yeah. But, Tesla stock, it's had big drops before and recently, actually. I mean, you only have to go back to March 10th when Tesla's dropped 15.4%. Only a few months. What do we see in the days after that? I mean, circumstances are different here, but you saw, the next day it rallied 3.8%. The next day after that, it rallied 7.6%. So, there is a tendency for dip buyers to come in here pretty quickly. But I feel like with the room I gave myself, 245, 250, I'm in pretty good shape here. The volatility was there, got good premium on it. So took a stab at it. I might adjust the position tomorrow depending on, how we're looking. But I agree.
You got to buy Tesla here. I totally think you have. This is a huge opportunity to buy Tesla.
Yeah. This is a good opportunity. And 250 is also a little bit technical. There's a good amount of congestion there. Through the March to April range, we had, sideways chop for a bit before we rallied. We've given up, all the gains going back to the beginning of May. So everything we did in May, we rallied about 30% Tesla stock. So, a significant up move. We've given it all back in pretty much a day here. This is almost like seeing your parents get into a heated argument for the first time when you're talking about your confidence getting shocked. You're a little off put, a little, discombobulated from it. So I think, this is bad for market confidence. Seeing someone as prominent as Trump and Musk get into this spat. I think I put this on before I saw the Epstein files tweet. I thought it was just a little back and forth, wasn't going to escalate too much more. Then you see the Epstein tweet, and then it's like, it looks like Trump's latest tweet or truth is a little bit of de-escalation. He definitely could have given, I expected a larger response to come after that Epstein tweet, but we moved off the lows a little bit here today, not too much. Most of the losses held. It's going to be really interesting to see what happens tomorrow morning with this. But just the weight of Tesla, if it continues to fall, it's going to drag down the Nasdaq, and then confidence is going to be, hinged on that. So going into the weekend here, especially if we get a lackluster jobs report on top of it, we could be in for some pain here.
Can I just offer one other thought here, which is not a particularly novel or innovative thought, so please forgive me. But don't you both think, and doesn't the world probably think, if you reflect on this for 1.5 seconds, that because of the reality show nature of this and because of the nature of these people, that there's got to be at least a 50% chance of a big public makeup session, reconciliation, I love you, I didn't mean to hurt you, I didn't mean it, you didn't mean it, within a week. That there's a 50% chance that if we're sitting here in a week and it's like, I didn't mean it, you didn't mean it, I love you, you love me. Come back, we can share a bed again, use the parental metaphor. I think that's all the more reason why you gotta buy Tesla.
So I think that's absolutely a possibility.
Yeah. And, the betting markets are interesting. If you look, there's will Elon Musk unfollow Donald Trump this year? We're at 60%, trading right around there. We got as high as 69% earlier today. Will Trump release any of the Epstein files this year? We're at 40%, up from 34% yesterday. Will Trump sue Musk? 45%. Will United States ban X? 9%. Those are both new bets on Kalshi, but definitely some interesting things happening there that you can bet if you want to play this a different way than the market.
So I have a chart of Tesla here just to kind of contextualize what you guys are talking about. And Thomas, to your point, this move here has now erased just a little bit over half of the rally from the kind of Liberation Day low unwind. So if Liberation Day is like right here, essentially, and this is the day that the president puts his first 90-day pause on this thing, that's the low. Everything kind of rallies off that. We've erased more than half of it. We are basically now into this congestion area, let's call it, with a bottom around 270. And then if there's a further kind of follow-on reaction to all of this and we break down here, then the ranges you're talking about come into into force. So this digestion right here becomes the place you're looking for Tesla to kind of find a bottom and go, okay, chaos aside, the kind of fair value that the market might say applies to Tesla is here. Now, this is Tesla fair value in a world where whatever the company faces probably looks like some friendly fire damage from the, well, then friendly fire, from the reciprocal tariffs, because obviously Tesla has significant exposure to China, and probably some element of concern around the EV mandate going away, as the president has already posted about. So this is sort of fair value Tesla with those things in play. It isn't fair value Tesla with the company is in open warfare with its regulator and ultimately the holder of power in its most important jurisdiction, the United States. Now, I'm certainly not suggesting that there's not a reaction bounce off this. I don't really know. I think it's absolutely reasonable to say that you could have a kiss and make up session here before long. I mean, Elon Musk is not a politician, so take this analogy with a grain of salt. But obviously, the Republican Party is full of people that have both very loudly criticized and broken with the president, only to then become some of his staunchest allies. And we're thinking Ted Cruz, we're thinking Lindsey Graham. These are politicians, though. There's also people that have broken with the president that have not made up. So think Chris Christie. There's people who have always been opposed to the president and never came to the other side. Think Mitt Romney. So there's a range of outcomes here, and these are politicians. On the business leader side, we obviously had a much more anti-Trump perspective from, let's say, the tech world in the first iteration of the Trump administration, obviously a very different iteration now. So this can go a lot of different ways, but I think we absolutely have to be open to the idea that if these people were singing each other's praises like a week ago, and now they're in open public combat, they can be singing each other's praises again in another week. That's just, we have to be open-minded to that idea. But if they don't, and I think the thing that, incidentally, we've been saying on Overtime for a long time, and we certainly were not the only ones. The Economist wrote a whole expose on this. Both of these people are the type of people that think themselves the smartest person in the room, that are uncompromising, that are supremely confident in their perspective, and it was only a matter of time before the immovable and the unstoppable clashed in a kind of comic book way. This was coming, and people have been talking about it since last year, that these two personalities were bound to come to some kind of a clash, just by nature of their similarity. So let's see if they're both self-interested enough to make up, more so than petty enough to keep fighting. But in a world where they keep fighting, Thomas, is this still fair value Tesla? Because in my mind, the old Soviet adage comes to mind, and yes, I'm a permanently Soviet scarred individual, having grown up in that world for the first 10 years of my life. There's a Soviet adage that goes, the government always has one round in the chamber extra. And the sentiment is, you can pick a fight with anyone, but you do not pick a fight with the Tsar. Whether it's the Tsar or the Commissar or whatever you like, you don't pick a fight with government, because the government always has one round in the chamber extra. So if Elon's going to pick this fight, and there's going to be an effort to strip him of these government contracts, is this still fair value Tesla in your mind?
So I mean, once we knew the big beautiful bill, the EV tax credits were likely gone, Tesla already started dropping.
Yeah.
And the argument for EV tax credits being gone, is it going to hurt legacy automakers more than it's going to hurt Tesla? Because one is going to somewhat benefit if one gets more hurt than the other. And if EV tax credits went away, it probably would hurt the legacy automakers more, since, you know, they're not at the point where Tesla has gotten. So I don't know. I mean, it depends if Trump actually follows through on these threats. Some of the threats you could follow through on with less repercussions than other. If you're canceling SpaceX contracts and things like that, there's not another company that can step in, at least over the short term, that can do some of the things that SpaceX does. So that,
right,
you know, that is unlikely in my mind to actually
or
play
Starlink,
out.
by the way.
Starlink too, yeah.
That's right.
Yeah.
That's right.
So yeah, I think if there was an actual retribution, a tangible action through the government, it would be against Tesla more so than SpaceX or Starlink. So yeah, I mean, what are investors going to want to see before buying this? Are people going to buy this thinking, you know, it's a generational buying opportunity, whatever you want to call it? I'd probably say we do rebound from here. I think tensions will cool, cooler heads prevail. But you never know. I mean, with two big characters like this, two big egos, this could be a spat that, you know, there's now a dividing line and they go their separate ways. And, you know, Musk isn't close to the president anymore where he can influence government policy to where it's going to benefit his companies. I'd have to say we rebound because I'm long, so that's my bias.
I mean, that makes sense. So I'm, just as an aside, I'm kind of waiting for the first reporter to talk to the president after this, bring up the taco trade and go. So does this fall under taco trade rules, or is that only reserved for China? And try to rage bait the president into another popcorn-worthy episode. Just taking a look at the sector performance here before we get too far afield. S&P 500 down 0.5% here. And looking at what that looks like sectors-wise, interestingly, the worst performer on the day, consumer discretionary, down 2.5%. That's not what you want to see. Staples down almost 1%, 9.96%. Materials down 0.6%. The only sector up on the day, comms, that's just a little bit higher, 0.14%. Everything else kind of fractionally down. Real estate flat, industrials flat, healthcare flat-ish, energy flat-ish. The big losses today centered on the consumer, and of course this has been one of my pet things, basically saying tariff this, tariff that, noise, noise, noise. The really important thing here is that in the first quarter we had the weakest consumption in almost 2 years come out of the GDP numbers, and that's 68.5% of the economy. Everything else is whatever. So if you lose the consumer, then how do you not have a global recession when China is at a standstill and the Eurozone is likewise, and both have basically been stuck there since the middle of last year? How do you then not lose the only pillar that the global economy has to stand on, which is the U.S., and that pillar held up by a service sector, given anemic manufacturing, again, going back to the middle of last year. So this is, I mean, you could blame the trade war, but that would be disingenuous. The trade war, if anything, has been a little bit of a lift to manufacturing as people have tried to front run the tariffs and restock. So the manufacturing sector has been anemic basically since even a little bit before the middle of last year. Services has been powering the U.S. economy. It's also why the strength in the U.S. hasn't spilled over into other markets, because most U.S. services demand is fed by domestic firms. And so the situation is such that even Canada couldn't benefit, and Canada exports 80% of everything they export just south of their own border. They've been in dire straits because our boom has been locked on shore, as it were. If you lose that boom, as the ISM services data yesterday suggested we're already doing, how do you not end up in a global recession scenario? And so to see that it's the consumer stocks taking the biggest hit today, ahead of what is perhaps a soggy jobs report tomorrow, which would be, of course, a referendum on the consumer, it's a wonder in my mind that stocks aren't down more. And maybe what they're looking for is a further catalyst. Maybe what they're looking for is for the data to actually come out. In your mind, gentlemen, by all means jump in and take a crack as you wish. Does this jobs report matter in the context of all this noise tomorrow? Because I know it does to me, but I'm a macro nerd. It will always matter more than all of this noise to me, because that's the thing I'm looking at. But will markets care?
I mean, this is a little bit of a mealy-mouthed answer, but to the degree to which it is meaningfully away from expectations to the downside, it will matter more than it would have before today. So if it's near expectations, it'll be whatever it's going to be. It'll move through whatever the churn is in the bond and the things. If it's stronger than expected, it will probably be bad-ish, because it'll be no rate cuts, all that jazz. If it's meaningfully weaker at the same, like right now there's a referendum on the quality of American leadership. I don't believe it's good to have open indictment of the quality of American leadership in such a public fashion at the same moment that what I believe is the most significant economic data point in the country, which is the labor market, is showing shocking signs of weakness. You don't want the house to be weakening at the time when the king of the castle is a fruit bird and is in a reality TV show like Spat.
Thomas?
Yeah, I think it matters either way. Bad jobs report, market down. Good jobs report, market up. I think, a lot of the attention is centered on growth right now. So with the economic indicators weakening, is it consumers are simply tightening their balance sheets and being fickle in their spending in anticipation of a slowdown or, these tariffs impacting prices? Or is there a real structural weakening in the U.S. labor market, and are business leaders taking decisions now and saying we are going to hire less, we're going to start laying people off? If that's the case, I think that's a precursor for, a recession. And maybe perhaps it's not only bad jobs report means recession, but if we get a bad jobs report, I think it's going to put the market on edge. It's going to send a real warning sign that these weakening consumer numbers that we've seen are actually caused by, something deeper than just, households tightening their spending. And, you get unemployment rate going up, you get margins falling for companies, things like that, and then you get them laying off even more. And given the backdrop of trade uncertainty and like Dylan said, uncertainty around the competency of leadership, then that creates an even bigger problem, a snowball effect, so to say. So I think this is probably going to be the most impactful jobs report of the year. It's going to be closely watched. I expect it to be volatile market reaction if we are anywhere outside of those expectations to any great degree. You get an inline expectation jobs report. The market might keep its focus on the prevailing narrative of, Trump, Elon, trade talks, things like that.
So just to, and I think we're all of a mind here. I think the bottom line here is this would be an absolutely awful time to get a bad piece of economic data, because the people that you would want to be polishing their firefighter helmets if there is a fire are too busy squabbling amongst themselves, and you don't want for a fire to happen then. You don't want for the people you rely on to come rescue you in the middle of an economic downturn to be preoccupied with schoolyard antics. And I can't believe I'm about to quote Kanye West here, but he put out a tweet earlier today in response to all of this. And again, I'll quote, "Bros, no, we love you both so much." So that's maybe a zeitgeisty lens on what's going on. And if you're the U.S. consumer and you've been concerned about tariffs and pulling back on spending, and maybe what you were doing as you're describing, Thomas, is kind of a precautionary thing, not dissimilar from what we've seen from businesses, where you read the PMIs, you read the ISMs, everybody's kind of like, oh no, uncertainty. We don't know how to make a bet here. So what we're going to do is not necessarily bet against what the president is doing. We're just not going to bet. We're going to take our money and we're going to pull it back until there's some sort of clarity on all of this. Maybe that becomes more hysterical and more defensive if, in fact, the situation is not just that we have uncertainty, but that the consequences for growth of that uncertainty are arriving in the one place you don't want it, the jobs market and the consumers, and the firefighters are too busy doing God knows what to pay attention. So that's not what obviously you want. And in the context of all of this, I think for me, the thing that stands out maybe most of all is what the bonds are doing here. And go to the contiguous contract because that looks like a more insightful picture here. And I'm just looking at the 30-year because what we've seen, incidentally, as foretold on this very show over the recent weeks, is this idea that you have an economy that's decelerating at best, let's say, and maybe it's decelerating for sentiment reasons and not hard data reasons, but it is decelerating, that much we know. And the Fed is not saying that it's going to come and do things about it. The bar for the Fed has been raised very high because we've heard the Fed now basically since March make this argument that, look, we don't know what to do because what all of this does is it puts our two objectives, maximum employment and price stability, in direct conflict. Because we don't know how these tariffs are going to work out or what's going to happen, but we do know that historically tariffs are inflationary because they amount to a consumption tax on imports, and also that they're bad for growth because they put up trade barriers, they reduce economic activity, they make things more expensive. So how are we to figure out whether we should be cutting or hiking? If it's inflationary, we should be hiking. If it's bad for growth, we should be cutting. We don't know what the balance is, but good for us, inflation is not terribly high and still going in the right direction overall. Unemployment is still relatively low overall. We have the benefit of time. We're going to sit on our hands. And so what you've seen in Fed funds futures is that expectations for this year have become anchored, but expectations for next year are getting increasingly dovish. And that's the markets telling you what all this means is the Fed is going to wait to see the whites of recession's eyes before they act, which means they're going to be later than usual to respond. And what that will mean is more cuts are going to be needed later, if later is what you wait for. And you've seen this show up now in the bonds, obviously, with very clear emphasis this week in the wake of yesterday's weak ISM services data. You're starting to see, and obviously this has been going on longer than that, since last week, give or take, even, let's say, a week and a half ago, we've seen this slide up in the long end of the curve because you're starting to get this expectation that there's going to be more cuts later. So the way that I'm sort of looking at this in terms of the jobs report is saying, if the jobs report is, let's say, somewhere in the middle of the distribution of outcomes, so if you kind of envision a normal distribution curve, and you say, here's the right tail, here's the left tail, and then there's most outcomes in the middle. If you get one of these middle outcomes, that might be the worst of all possible things. Because that tells you that things are degrading, but they're not degrading in a way that the Fed is going to come and rescue anyone soon. If you get, and by the way, you're looking at the Fed even more intently after today because you know where nobody is fighting with anybody and getting into schoolyard spats, at the Fed. So as ever, you're looking to the Fed to be the competent economic firefighter while everybody in Washington is doing their Washington thing. And so if you get a middling number, then the Fed's not coming, at least not on any kind of near-term timeline. If you get a really strong report, that's probably relatively good news, but you'd have to go way out there to get a really strong report to tell you, well, actually, everybody's wrong about the economy. The economy is actually strong. We don't need rate cuts, and that's a good thing because of how strong the economy is. All of this is nonsense. And then if you get a really weak report, then that's probably bad news because that's negative for the economy, but it would suggest, and perhaps that makes it good news ultimately, that the Fed is coming soon, that the Fed is going to look at all of this and go, okay, now's the time. Obviously, the economy is coming apart to a greater extent than we thought. So it seems to me that it's at those tails that the good news is, but in the meat of the distribution, you get ongoing chaos without firefighting. And that becomes the bad outcome that you're looking for. You then get more rate cuts later. So the bonds keep going up. The dollar probably sells off on that speculation. And then stocks don't like it just on general, we have nothing to work with here grounds. I should point out that since we've had this widening of the spread between when the rate cuts are coming, so May 22nd we saw here is when the long bond starts going up around this idea that we're going to wait longer. This is where that is. Once that begins to happen, the stock market stops rallying. That's where the cap is. So,
and so the degree to which the jobs number actually emphasizes that, then then it's a lousy event for anybody who's a bull.
Yes, that's kind of my 2 cents on this. That the last thing you want is status quo. You want either something so bad that the Fed is going to stand up off its chair, roll up its sleeves, and go in, or you have something so good that everybody breathes a sigh of relief and goes, you know what? Forget all this noise. The real economy is fine.
Buy them.
Yeah.
We shall see.
And with that, overtime is out of time. Don't go anywhere because I'll be back in just a couple moments here for Macro Money to go through a ridiculous and probably unnecessary amount of charts to prepare you for this NFP report, alongside a really fun tidbit from the Wall Street Journal, which has been questioning whether any BLS data is even worth looking at. Stay tuned for why that is. And we'll be back with you. Thank you, Mr. Westwater, for covering here today. A very welcome perspective, as always. From Milan, Chicago, and San Francisco, this has been Overtime. Don't go anywhere. We'll be right back. What a day. What a day. It is certainly not without fireworks that we head into the end of the week here. This is Macro Money. I am Ilya Spivak, head of Global Macro here at tastylive, and we thought we were going to talk about macroeconomic data here today, and we will, against all odds, but of course, the big question swirling around with the way that the trading day ended here as the closing bell was about to ring is, does anybody care? Because, of course, what we've had here is a blow-up. I suppose it was always brewing, but a blow-up between the president of the United States and the world's richest man, Elon Musk. And needless to say, Tesla stock reflects just how bad it was. At one point, it was off nearly 17%. Tesla finishing the day here in ugly shape, ultimately closing down 14.3% after the president threatens to take away government contracts from the Elon Musk universe of companies. That, of course, includes things like SpaceX and Tesla itself. And so lots and lots and lots of fireworks here at the end of the day. But for us as traders, we need to contextualize this practically. We can't be trading the soap opera because that's not a forecastable set of variables, and that, of course, makes things exceedingly difficult to figure out and makes risk exceedingly difficult to manage. So, without losing sight of the drama, let's take a look at some actual economic variables that factor into this equation, and then bring the two together and extract out of them what is a tradable set of ideas that we can actually take into the markets and do something with in the real world. So, needless to say, the piece of data that we're talking about here is the U.S. jobs report. This is expected to be something of a cool down, not an aggressive one to be sure, but a cool down nevertheless. Expectation is that we're going to have 130,000 jobs added in the month of May. That would be down from 177,000 in April. It would also be the smallest increase since the shock 36K rise in October of last year. You can see that on the chart there. So this would be a very soft reading indeed, but not a soft reading outside the kind of recent range of outcomes, broadly speaking. So if you want to kind of take a look at this range here between, let's say, just above 300 and sort of taking this jump here into the range and sort of looking at this right here, we get about a labor market that is within its recent collection of outcomes. If you want to take a slightly more conservative stance and say, well, you know, here's your range here, and you take that from where the unemployment rate has been, which is oscillating in a narrow range between 4.2 and 4, then this basically takes us back, give or take a year, almost a year, not quite, to August of last year. So let's say a 9-month kind of standstill for the labor market, because the expectation is that we're going to stay right there once again, 4.2%. The lead-in on this data is, let us say, mixed. So yesterday, we had the estimate of private payrolls from ADP, and as ever, take this thing with a grain of salt. It is not the world's best predictor of how NFP comes out by a long shot, but nevertheless, it is an indicator that the markets pay attention to somewhat. The expectation was that we'd get 115K, and it ended up being 37, so obviously a major downside surprise here. Also, the weakest reading on this metric that we've seen in quite some time. We'd have to go back all the way to May of 2023, where we had a sharp decline of 53,000 jobs, to get something relatively similar. So we're talking about a more than 2-year low for the ADP measure here. Looking at the employment components of the ISM surveys from the Institute of Supply Management that we just had this week, the picture is, let us say, a little bit more encouraging, but only a little. We have here, of course, a set of indicators built like PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. The upshot here is that the service sector gets a positive month of job creation, according to these numbers, in May, despite the fact that overall the service sector itself shrank unexpectedly. That's what we saw in the data yesterday, and of course that gave the markets quite a bit of indigestion. We'll get to that momentarily, but nevertheless, we do get positive employment growth. It's not tremendously strong. In fact, it's barely above that 50 line, and certainly still a major downstep from where we were on jobs growth even just recently here. But nevertheless, we had been contracting on service sector employment, which accounts for anywhere between 70 and 80% of all jobs in the United States. And after 2 months of contraction, we saw growth. So that's somewhat encouraging. On the manufacturing side, of course, we've seen a contraction in employment for 4 consecutive months now, and the trend has been toward weakening. But and that's been there really since we peaked after the massive rebound from COVID lows. But at least here, it doesn't look like May was a terrible month for job creation. The jobless claims numbers we saw come out today, they paint a scarier type of picture, and their reference point is perhaps scariest of all. We see a significant surge in initial jobless claims last week. And for a reference, obviously we can see that they've been going up since the beginning of the year, but this is the highest since about October. And of course, what do we know about October 2024? It's not a happy time for the labor market. We can see this was where that errant spike down to 36K was. So if jobless claims are telling us anything about the overall dynamics of the labor market, the story they are telling is not a happy one. Overall, looking at the way that U.S. economic data has evolved relative to expectations, we regularly look at this index from Citigroup that measures the way that U.S. economic data performs relative to forecasts, takes it in aggregate, and measures how things are behaving, and dumps them all into this one indicator, where 0 is data is performing exactly as expected, above 0 is better, below 0 is worse. And we can see here things have been kind of muddy here recently, but the reading of negative 3.1 here narrowly suggesting that we are biased toward downside surprises. Now, what does this mean? It suggests that the models that economists are using to generate economic forecasts are spitting out variables that are rosier than reality is endorsing in the most recent figures. Minus 3.1 is not a right home about kind of a miss. Obviously, we've seen worse things. And last year, we saw a worse growth scare. But nevertheless, it does suggest that there is a slight bias to those models having overshot expectations if they are tuned to a rosier reality than actual results are suggesting. That, of course, is tilting the probability, however modestly, in the direction of a downside surprise until those models are retuned. And because we're maybe just at the start of some sort of a revaluation of those models because we've just flipped back negative, then there is still runway here for this data to disappoint. On top of all of this, there is this bit of additional fuzz. And this comes from the Wall Street Journal, and it has to do with CPI, but the relevant bit here is this comes from the Bureau of Labor Statistics, and the data that we're going to get from the very same people is what we're waiting for. The jobs data is likewise coming from the same statistical agency within the U.S. government. So it bears discussing. What this chart is showing us, and what the story from the Wall Street Journal broke yesterday, is that economists are becoming increasingly leery of the quality of U.S. economic data because hiring freezes and layoffs and budget cuts since the beginning of the year around the effort to slash government spending and reduce the size of government that, of course, Elon Musk, until very recently the so-called first buddy of President Donald Trump, was overseeing, that what all of these things did was significantly degrade the amount of resources that the BLS has to conduct the surveys that it bases its data on. And so what it's had to do is use these kind of imputed readings and implied figures much more so than actual survey responses, and that they've had to do that to a much greater degree than before. So we can see here that basically going back to COVID times, there is a spike in how much of this stuff is being used. We can see sort of what's normal is about 10%. Obviously, during COVID, things were on lockdown, so more of this was being done, maybe up to about 15, 16%. Over the subsequent years, we've come back into this kind of more normal around 10% range. But over the course of the past 2 months, April and February, and of course April with the most aggressive effect, more and more of the data has been from these alternative sources because there's just not enough people to do the surveying. And so the reliability of this data has come into question because now close to 30% of it is based on what some economists worry is fuzzy math. And so if this is true for CPI, which comes out of BLS, it's perhaps also true for the jobs data, which comes out of BLS. So what these numbers ultimately mean and how much weight they have will be an important question, on top of what the content of the data itself actually is. And of course, no more is this more evident than in looking at what the Fed has been saying and the expectations for monetary policy that have followed. So what you see here is that, cumulatively speaking, the market is about where the Fed has been saying it wants to go, or at least it thinks it's going to go, going all the way back to December, March. So we haven't had the June update, of course, so far of the summary of economic projections, but both in December and in March, the Fed said 50 basis points apiece this year. Next year, that's how many cuts you're getting. That's 100 basis points. The market is only a little bit above that here at 107. But the dynamics of what's occurring, they have changed considerably. And of course, what the Fed has been saying is, look, we have these tariffs that are occurring, and we don't know what to make of them. Because historically, what the tariffs mean is something bad for growth, because tariffs are a tax on imports. That makes imports more expensive. That hits consumption. Consumption is the overwhelming majority of the economy, so not exactly rocket science there. But at the same time, they're inflationary because of all these same dynamics. So if these policies are both going to stoke inflation and they are going to be bad for growth, then what's the Fed going to do? On the one hand, they're being pulled to cut rates to help with the piece on growth. On the other hand, they're pulled not to do that because they don't want to let inflation expectations out of the bag, because then we're back to the bad old days of inflation before the Fed's 2022 rate hike cycle that, of course, has so painstakingly worked to bring inflation down. And so what the Fed has said is, look, we just don't know which side of the ledger we're going to prioritize here, but good news, we're well positioned to wait because the unemployment rate is still, relative to history, somewhat low. Again, we're kind of hovering near relatively low levels here, despite the kind of creep from 3.4 up to 4.2. And of course, inflation is on its way toward the 2% target. It's slowed down on that path somewhat recently, but nevertheless, it is hardly surging. So we have a situation here where we can just sit around and wait and see what happens. And so what you've seen against that backdrop is the expectations for what policy will do this year have become relatively anchored. The Fed said 50 basis points. We have 48 basis points on the menu, and this is not going anywhere. But you can see the cumulative amount of easing this year and next has actually started to expand. And that's as more rate cuts get baked into next year, because the market is evidently judging, as we've discussed here before, that delaying rate cuts now will mean that the Fed will have to do more rate cuts later, because it will have let the economy weaken more so than they might have otherwise to get this additional evidence. And then they're going to have to do some degree of catch-up. And the reason the markets appear to be convinced that this is in fact what's going on, as we've talked about here before, is the measures of inflation baked into the bond market, so-called break-even rates, they've been going down since the beginning of the year. And despite the violent rebound in stock markets that we've seen, they have actually not recovered, as though to suggest that what we're looking at here is a situation where inflation isn't going to surprise higher because of the tariffs. It's going to surprise lower because whatever hit economically comes from the tariffs will be bad enough that it hurts demand to such an extent that the disinflationary forces of the demand decline will be more consequential than the inflationary forces on the other side. In fact, we've, as of today, declined to just 2.3% on the 5-year break even. For context, that is the lowest that we've been in about a month and some change. So going back to the beginning of May, late April here on the 5-year break even, to essentially say, look, the market thinks that the Fed is being indecisive, but they are in fact convinced that it's the growth side that needs to be prioritized, not the inflation side, because whatever economic downturn is coming will be the dominating influence. And we've seen this already showing up in the markets. So let's take this same policy calculus and note that right here, where this widening out of the spread starts to happen, where easing starts to rebuild, even as expectations for this year hold steady, but those for next year expand, the violent bounce in stock markets from the April low after so-called Liberation Day, when everybody was freaking out about the latest